Yeah. So good evening, friends. Welcome to this CPE session on Benami Transactions. Good evening, Rajesh Sanghvi sir. He's the speaker today, and he has been generous enough to join us and share his knowledge with us on the Benami Transactions Act, which is one of the most, I would say, used act nowadays by all the powers to be. The Pmla and the Benami Act, which have a very long hand and very tough hand with which they are reaching out to, to curb the practices of money laundering and Benami transactions. And what is interesting to note is that Benami transactions at one point in time were accepted transactions by the government. But it was only as more and more of illegal money was being put into circulation that the act was brought in 1988, I think, with the 9 sections, and then after that, since the act in itself did not have much teeth, the act was brought in as an amendment because they didn't want to bring a new act, mainly because the act would have, could not have been, the amendments could not have been brought in with a retrospective effect. So they brought in this Amendment Act in 2016. And since then, the act being actually enforced with great vigor by all the powers to be, the economic offences wing, the income tax, and even in the Trust Act, this act is actually being used to a very great extent. And we have Sir today who's going to speak to us about the do's and don'ts of the Benami Act, and we as chartered accountants should actually, I would not say have a cursory knowledge. We should have a hands-on with all these acts, because this ultimately we are going to advise our clients on the various transactions and how the various acts which have huge penalties and prosecutions and seizure of assets, which is going to affect the quality of life of our clients also to a very large extent. And also nowadays the professionals are also being penalized for giving the wrong advices. So I think that this is an act which all of us need to get a grip on and pass on this experience to our clients. And without much ado, I will introduce our speaker for the day. CA Rajesh Sanghvi. He's been practicing for more than 33 years in Mumbai, and his areas of practice are income tax, GST, Pmla, Benami laws, FEMA, trust, documentation and drafting, especially property-related matters, cooperative societies and other allied laws like the WACS, the stamp duty, the FCRA and the RERA, etc. And after completing his CA, with the 35th All India rank in the final examination in May 1987, he did his post-qualification management course from the Institute of Chartered Accountants, and he has also stood second All India rank in the management accountancy program of our institute. And he's passed out with honors in the finance course of ICAI. And he's also got an honor from the World Trade Center in the course on Forex. And he submitted a paper on dollarization, that is converting our currency, that is from rupee to dollar. And he's given lectures on topics like FEMA in day-to-day management, stamp duty, income tax act, penalties, money laundering laws, trust, powers of attorney, black money, Benami laws, RERA, demonetization, etc. in various seminars and conferences all over India. And he's given lectures and presentation on other topics also, like Right to Education Act and the RTI. And he is contributing rather regularly on FEMA and Black Money Act in the ICAI manual. A person with a very, very niche area of practice, and he's been generous enough to share his knowledge and experience with us. I'm sure it's going to be of great use to all of us attending this seminar today. Thank you very much for accepting our invite, sir. And on behalf of everyone in SIRC, a very warm welcome to you.
Thank you.
Over to you,
Thank
sir.
you. Okay. I suppose the screen is clear.
Yes, sir. Please. Visible, sir.
Excellent. Thank you so much. Thanks for your kind words. Uh, Today we are going to discuss about the Benami law and its intricacies. And I'll just make a few assumptions and presumptions before I commence. Uh, First of all, I may presume that a majority of the audience right now, whom I can't see, but my heart can feel for you, are presumably in practice, be it income tax practice or GST practice. A lot of you all may be into corporates and in the industry also. So that's a little presumption I'm making, point number one. Point number two, I should expect, I think so, I have the right that all of you all would be pretty well off in certain sections of the Income Tax Act, certain definitions also, and some of the allied laws. Because during this process, during this presentation, I may be touching upon Transfer of Property Act, I may be touching upon the Power of Attorney Act, which is a 4-section act. I may be touching upon PMLA, Prevention of Money Laundering, and certain issues related to that. So I may be switching between various laws. The purpose being that study of this law, Benami law, has to be in sync with what the ITO is doing, what the Enforcement Directorate is doing, because I practice in PMLA also, what the ED has been doing, and to some extent some of the other agencies, because we are gradually seeing that a lot of this information is being shared per se between the various law enforcement agencies. And inevitably, Benami Act is acquiring large dimensions as such. So let's go through this act, the subtle nuances of this act, wherever I can take you in depth. Of course, let me tell you that learning is a continuous process. Even I'm learning in the process. So we have this Prohibition of Benami Property Transaction Act. This is the full name. So it's a PBPT Act 1988. In short form, I can call it as the Benami Act, or I may refer to it as the PBPT Act. Now, let me just see if I can go to the next slide. Okay. So this has been an all India law. I mean, the PBPT Act. It's a 72 section act. And it was introduced in the Lok Sabha on this date, and then there was a standing committee report, and then approved in the Lok Sabha and the Rajya Sabha, etc., etc. And on 1st of November 2016, this act has been notified on 1/11/2016, and incidentally on the same day the rules were also notified, and our memories are pretty fresh on this thing, that on 8th of November 2016, demonetization was announced. And prior to that, somewhere in July, August, we have the income disclosure scheme also. Okay. Now, with this backdrop, sorry, I just need to. So we have this PBPT Act. The Act has come into force on 1st November 2016, and the rules also have come into force with effect from 1/11/2016. A short history of this act. You see, originally we had the 1988 Act, which was the Benami, let's call it the Benami Transactions, Benami Prohibition Act. This was a very small act, only 9 sections. And whenever in an act there are words like this, as may be prescribed, I repeat, as may be prescribed, that means there have to be rules. And without rules, literally the act can't come into action, in force. So the Benami Prohibition Act of 1988 was pronounced. First it was an ordinance, then an act, but there were no rules. And there were no rules right from 1988 till about 2016. And hence the implementation, the acquisition of any property or the procedures, they were not there. In fact, there were no cases in the last 28 years, that means from 1980 to 2016, there were no cases of the Benami Act as such. Yes, there were certain case laws which we will discuss, the Khan Singh case and all that, but they were just discussing the concept in principle. So now, on the recommendation of the 57 Law Commission, in 1988, an ordinance was passed, and there we have the Act. Then comes 2016. Now, 1980 to 2016, 28 years, no rules. So no action. So why didn't the government repeal the earlier law and come out with a new law, de novo, fresh, from 1/11/2016? That didn't happen. Why had it to go for an amendment? Friends, please remember the name of this act is PBPT 1988. The name is not PBPT 2016. It came by way of an amendment act, but the name is PBPT 1988. So in 2016, they come up with an amendment, and those that 9-section act of 1988 gets converted into a 72-section kind of a new act in a new avatar. Why an amendment? Of course, the logic being that income tax is a revenue generating law. GST is a revenue generating law. But PBPT, PMLA, these are punitive laws. Punitive. These are punishment based. These are laws which say that, look, you can't do this. You can't take in someone else's name, Benami property. We'll come to the definition. You can't do money laundering. And if you do it, we'll put you in jail. We'll confiscate. We'll levy a fine, etc., etc. So these are punitive laws. Now, friends, please read Article 20 of the Constitution, which you all would be knowing, but just for your academic knowledge, I've put in over there. This is just like saying that a penalty section, like, a most favorite 271 1C, now 270 capital A, and things like that, the penalty section cannot have retrospective effect. The taxation and the other normal sections may have retrospective effect, but not a penalty section. Why? Article 20, which says that no person shall be convicted of any offense except for violation of law in force at the time of commission of the act charged as an offense, and he cannot be subjected to a penalty greater than that which might have been inflicted under the law in force at the time of the commission of the offense. So you can't legislate a penal law with retrospective effect, because today, for example, I enter into a transaction. Logically, I'll enter into a transaction based on the current knowledge I have of the law prevailing as on date. And I'll structure my transaction accordingly. I want to buy a residential flat in the name of my wife. I want to buy it in the name of my brother, and I'm paying the money, etc., etc. I'll structure it accordingly, keeping in mind the laws today. And tomorrow, if there is an amendment with retrospective effect, that all those who bought the properties in the name of the wives or the brothers, etc., the property, some kind of a retrospective amendment. I'm just dramatizing the situation, and that is not permitted by law. There's a retrospective amendment that'll lead to chaos. So retrospective amendment, especially as far as penal law, as far as penalty sections or these kind of penal laws are concerned, is not permitted, and hence the only way out for the government was come up with an amendment. You amend the earlier act and you come up with a new act in a new avatar, and you introduce that as an amendment, and that's how it went through. We had the amendment in 2016, and by virtue of this amendment, the old law remains in place. 1988, yes, it was amended. The old law had confiscation issues, provisions. The old law had prosecution. The old law had jail. The new law also has confiscation and prosecution and all of that. So it seems, and in my opinion, the government wanted a stand that if anybody has committed an offense, a violation of the Benami law from 1988 till 2016, they should also be caught and penalized. And post 1/11/2016, they should be also caught and penalized. I presume so that was the intention, and hence they come up with a 2016 Amendment Act changing the sections. But yes, virtually this was, if I can say in my opinion, a completely, or rather majorly, a new act. And that is why, as we'll see in the slides, a lot of high courts have come down, like the Rajasthan or even the Bombay High Court or Kolkata also, stating that this act, PBPT Act 1988, does not have retrospective application prior to 1/11/2016. We'll come to those judgments. We'll read, we'll try to understand, we'll try to analyze. But till then, let's see the structure of the law. Just for information, friends, the new PBPT Act 1988 amendment says that, three sections, namely Section 3, which is prohibition, Section 5, which is confiscation, and Section 8, which is on adjudicating authority, comes into force from 1/11/2016, and rest all the other sections will be deemed to have come in force from 19th May 1988, when the 88 Act came. We'll go into this. Friends, corruption, heavy taxes and compliances, crime, black money, all these are leading to money laundering. And I can say money laundering and Benami transactions sometimes travel in tandem. They travel together. So comes the question that does it clash with PMLA? Does the Benami law clash with PMLA? Money laundering. Now, just a superficial definition of money laundering. This presentation today is not on money laundering. Money laundering basically relates to proceeds of crime, POC. That's an important word. All cases money laundering is not applicable, friends. We need to be very clear about this. So proceeds of crime from certain scheduled offenses, not all offenses. So in 30 different laws, Indian Penal Code and SEBI Act and Copyright Trademarks Act and the pollution laws, or the juvenile is not there now, or the prevention of immoral trafficking laws, or the custom laws, or Section 447 Companies Act. From 30 different laws, so many sections are there. From these 30 laws, the violations of certain sections will be scheduled offense. From that scheduled offense, there is some proceeds of crime created, some property. Converting that proceeds of crime, which is tainted money, into untainted money is money laundering. Now, in this process, Benami starts playing a role, because the person, very often we see the person who has committed the crime, some alleged crime. Let me take the most simplest example. Section 420 of the Indian Penal Code, cheating. A person cheats the bank and makes some money. And then, he does a lot of round tripping of that money, and he may want to bring it back, not in his own name, but in some other alias names, Benami names, for his benefit. So one, he's committed a scheduled offense, Indian Penal Code Section 420. He has generated some money from that offense, proceeds of crime. That money is tainted money. Then he uses some clever, intelligent accounting brain, whatever, and he converts that tainted money into untainted money. And he may navigate and get the money, no, may not be in his name, but in someone else's name. So here you have money laundering along with Benami. So both can work in tandem. Both can work together, friends. So this is the definition of money laundering. Just for academic knowledge, friends, I don't mean to burden you with what is money laundering, but you may be reading a lot about money laundering. ED attaches assets so much of so and so person, attaches assets so much of so and so person. ED attaches assets equivalent to the proceeds of crime. And you see the definition of money laundering. Oh my God, it's scary. Just if you can just read the slide. I don't want to uh, uh, whoever directly or indirectly attempts to indulge or knowingly assists or knowingly is a party or is actually involved in any process or actually connected with the proceeds of crime, including its possession, concealment, acquisition, use, and projecting or claiming it as untainted, shall be guilty of money laundering. And since it's a very vast definition, very often professionals are getting caught in this entire process of kind of attempting to indulge or knowingly assisting or knowingly being a party or involved in any process or activity connected with the proceeds of crime, converting that so-called black into white and things like that, the dirty things happening. And that is where a lot of action is also being taken upon professionals. So money laundering is carried out in 3 stages. There's a placement, layering, integration. So that is the way money laundering takes place. A different subject. Let's not get into that. But Benami starts playing a role in the PMLA process also sometimes, not all the times. Now, is the PBPT applicable on charitable and religious trust? Yes, it is applicable, but the government can, if they want, exempt it. Interesting point, but we'll see all these things coming up, friends. Let's see some simple sections just for a start. Section 3 is like, the charging section or the main section. This section says, look, no person means the individual and company and whatever, no person shall enter into a Benami transaction, period. Simple. You will not enter into a Benami transaction. After 111 or prior to 111? In my humble opinion, right now, though the matter is sub judice before the Supreme Court, even prior to 111-2016, that means right from 1905-1988 till 111-2016, Benami transactions not permitted. You will not enter into the Benami transactions, and of course, even after 111. Or else, for old transactions, I'm so sorry, for old transactions, there is jail up to 3 years. So up to 3 years can be 1 month also, up to 3 years. But after 111-2016, if somebody enters into a Benami transaction, and if he is convicted by the court, the special court, which is very often the PMLA court of sessions, then the minimum jail term, friends, is 1 year. It's 1 year to 7 years. The minimum is 1 year. It can go up to 7 years. That means after 111-2016, it's 1 year. And there can also be a fine. And there is also a fine of up to 25% of the fair market value of whatever is the Benami property. Okay, simple. So this is what is written over here. Section 3.1, which is the charging section. You will not do indulge. If you have indulged up to 3 years, so even from 1988 till 2016, if it's found that you're indulging in Benami, you can be penalized. And the logic of the government is the 1980 Act also mentioned Benami is not permitted. That also mentioned that Benami was an offense. That Act also mentioned that there is jail term for Benami. So where is the question of retrospective amendment? But as I said, I will leave this topic a little bit for when I come to the relevant case laws just to discuss on this issue. However, post 111-2016, anybody entering into a Benami transaction, minimum 1 to 7 years and fine. Now in Benami, the real owner, see, just to give you a brief idea of Benami, speaking about Benami, you would be knowing this word Benami is a Hindi word, Naam Benami. So Benami means, let's say, an alias kind of an entity, alias, some pseudonym or some in someone else's name. So in Benami, you have the real owner, the behind the scenes real owner, and you have a Benamidar. The person is just given his name. The property is in his name currently, but he is not the real owner. Somebody else, let's say me, I am the real owner. So there is a Benamidar and there is a real owner. We'll use this term. For example, a motor car, a BMW car. I'm just taking an example, friends, please don't catch my words. Let's say there's a government servant, got a lot of money, and supposing he wants to buy a BMW car, which is for 50 lakhs, and he can't buy it as his name because salary is about the 100,000 rupees a month, so 12 lakhs a year. So how can he buy a car of 50 lakhs unless he takes a loan? So he got some money and he tells his friend, you take this, you do whatever you want to do, you buy a BMW car in your name, but please, it's only in your name. It's meant for me, for my benefit, my or my family's benefit. So this is the structure. Benamidar, real owner, and the BMW car is the property. Now let's see. The real owner, or on his behalf anybody else, they cannot file a suit or any kind of an action. Against whom? Against the Benamidar for the recovery of that asset. So that is not permitted. But he should be proved to be a real owner, and that should be proved to be a Benami transaction. Now, what is a property under the Benami law? It means only immovable property? No. Friends, look at the definition. The definition is really vast. Yeah. So, movable, immovable, that's fine. That's property. Tangible, intangible, which also means corporeal and incorporeal. So let's take the simple terms, what we understand in our income tax language. Tangible or intangible assets, that is also covered. So you have money lying in banks, cash on hand, gold, car, immovable property, everything, even intangible assets. And it includes any right or interest or legal documents. It includes any legal documents or any instrument, some document, evidencing title or interest in a property. And supposing the property is capable of conversion in some other form, let's say debenture is a property and debenture gets converted into shares, then the property in the converted form, let's say those shares, debenture to shares, convertible debentures, so in the converted form, that is also property. And it also includes the proceeds from the property. So gold, and I sell away the gold, then that is the proceeds, and that also becomes property. So we're just getting an idea of the definition, the meaning of the word property. So that, just a repetition, section 2.8, Benami property is any property which is a subject matter of a Benami transaction and includes proceeds from such property. Friends, this is important. Property you already know, but also the proceeds from that property. That is slightly important. Section 5. Any property being the subject matter of a Benami transaction. And what is a Benami transaction is the crux of this law. If you understand what is a Benami transaction, which is 2 subsection 9. I'm repeating, friends. If you can understand what is a Benami transaction, namely 2 subsection 9, A, B, C, D, believe me, your 80% knowledge, the working knowledge of this act is done. If you're only careful, rest it is procedures, representation, adjudications, first appeal, second appeal, third appeal, and how you have to be careful about it. So any property which is the subject matter of a Benami transaction will be compensated by the central government. It will be taken over. Simple. That BMW car found to be Benami property, confiscated by the central government. No compensation. The whole discussion is over. They find some shares which are Benami, they'll take it. They find some agricultural land Benami, they'll take it. They find a residential house, they'll take it. Property, land, movable, immovable, tangible, intangible, any asset. The definition of property is given. They will just confiscate those assets. So in Benami, what happens is the asset is confiscated, plus there is a fine up to 25% of the fair market value of that property, plus there is jail. So there are 3 implications. Okay, that's it. Now who's a Benamidar? We'll see who's a Benamidar, but in the meantime, friends, a Benamidar cannot retransfer the property back to the real owner or on his behalf to anybody else. This is also a restriction. That gentleman who was a Benamidar for the car, if it's found that he's a Benamidar, actually, he cannot transfer the property back to the real owner or to anybody else on the instruction of the real owner. Certain definitions for academic knowledge. We'll be analyzing all these things as we go down in this discussion. Now, this particular definition of a Benamidar. Let's say a Benamidar means a person or a fictitious person in whose name the property is transferred or held or held, and includes a person who's just a name lender. Now, let's just spend a few minutes on this, maybe 1 or 2 minutes, not a lot. It means any person in whose name the property is transferred. So that BMW car was bought in his name, that property was transferred onto the name. Property means the BMW car in the name so and so person. So he's the Benamidar. And sometimes it is not transferred, but he's just holding it. Now, friends, you remember even in our definition of long term and short term, we mentioned about holding an asset for 2 years or 3 years. It may not be owning, it may be holding an asset. If you remember to subsection 42A or so of the Income Tax Act, short term and long term, the word is held, but that does not mean held means just mechanically in possession. No, it should be a kind of a de facto ownership, kind of a de facto, means you're effectively holding that asset. That kind of a person will be said to be holding an asset in the sense over here. So that kind of a person can be treated as a Benamidar. A fictitious person will be treated as Benamidar. Friends, what is fictitious person? A fictitious person would be a person who's non-existent. There's nobody by that name. Supposing, hypothetically, and I'm dramatizing, supposing somebody creates a fake PAN card and a fake Aadhaar card of some Mr. Mohan Shah. Is there any Mohan Shah on this planet? No. That's a fake Aadhaar, that's a fake PAN card, opens a fake bank account. How he opens, I don't know, connivance or whatever it may be. Now that's a fictitious person. There is nobody by that name. And in that so-called Mohan Shah's name, he's buying assets. I know KYC and all these issues will be hurdles, but I'm just assuming that's an individual to be fictitious. Let's go to better examples of being fictitious. Let's say there's a partnership firm, Messrs. Infinity International partnership firm. So how do I prove that something is a partnership firm? Just a PAN card. Is it compulsory to register a partnership firm with the registrar of partnership firms under 1932 Act? Many clients don't register their partnership firms. So what is the evidence of a partnership firm? Partnership deed. Okay. So you take a old 100 rupees stamp paper or 500 rupees stamp paper, you type Mr. A, Mr. B to be a partner, Mr. A, Mr. B may be genuine people, and you create the partnership firm. Whether those Mr. A, Mr. B have signed or not signed, I wouldn't know. And this kind of an entity is created and a PAN number is obtained. Friends, it's a mixed question of facts whether this is a fictitious partnership entity, because Mr. A, Mr. B may not be knowing. They may be living people, but they may not be knowing that there is any partnership firm in their name. So any entity, a person who's actually in real life not there, fictitious. But look at the last part of this definition. Any person who lends his name. No, that is scary. Friends, how many cases you would have seen in income tax, and I would have seen in income tax, where somebody makes a statement, sir, I got the cash from so and so party, I gave him a loan check and I just lent my name in the transaction. Sir, I'm just a dummy director in the company, I've just lent my name to be a director on the company. They told me where to sign for a DIN and DSC, I did all of that, I'm just a name lender. Sir, I got cash from a party, I gave him a gift check, I'm just a name lender. I'm just a name lender. The person is admitting on oath under 131 or whatever. Benamidar. The definition of Benamidar is cover these kind of people. Now, the definition of transfer in Benami. The definition of transfer is any sale, purchase, or any other form of transfer of right, title, possession, or lien of any property. So transfer includes all this. That means even possession to a large extent. And friends, I mean de facto possession. I just don't mean that I got a mobile phone and I give it to my friends. Just keep it with you for 3 days. I'll take it later. So I've given him possession, so I've transferred it to him. No, that is not transfer. Transfer should have something more than mere possession. But yes, possession is very, very critical, friends. Now let's see. Now to understand the critical definitions of Benami transaction. Now friends, it's from here that 2 subsection 9 starts, and 2 subsection 9 is a lifeline of Benami. As I said a few moments back, if you can understand this section, you have done it. It's your study would be substantially complete. So 2 subsection 9, the definition of Benami transaction has A, B, C, and D. Now A is the most critical part in this definition. B, C, and D are just simple 2-liners, 3-liners as such. Let's see. Benami transaction means a transaction or an arrangement. Friends, transaction can be understood. We are students of accountancy. But this definition is also saying an arrangement. Arrangement is a very broad term. Okay, let's read ahead. It's a transaction or arrangement where a property, and you know what is property? Tangible, intangible, corporeal, incorporeal, document of title evidencing interest, or mobile, immobile. So where a property is transferred. What is the definition of transfer? I told you: sale, purchase, transfer, lien, possession, etc. Is transferred to or is held, de facto holding, by a person. So there are 3 legs, and all 3 should be satisfied. A transaction or an arrangement where property is transferred or held. So how it should be read? Transaction where property is transferred. Arrangement where property is held. I'm repeating. A transaction where a property is transferred. An arrangement would go for the next word, held. So any transaction where property is transferred to a person, or any arrangement where property is held by a person, that's the first leg. And the consideration for such property has been provided or paid. There's a difference. Has been provided or paid by another person. So I provided money to him, 50 lakhs, to buy a BMW car. And this is my friend in whose name the property BMW car is transferred, because he bought the property. He bought that BMW car from a dealer. He entered into a transaction. So transaction where a property is transferred to a person here. And the consideration for such property, BMW car, has been provided by another person, me, the real owner. And sometimes I may pay it also. So we have the first leg, the second leg after the and now the third leg. This is very important, friends. This should also be satisfied. And that property, that BMW car, is held by that fellow, by the Benamidar, for the immediate or future benefit, direct or indirect, of the person who's provided the consideration. So I tell him that, look, I'm paying you the consideration. It's going to be held by you, transferred in your name, but it is for my immediate or future benefit. I may tell him, keep the car, keep it in your garage for 6 months. After 6 months, when I feel everything is okay, then I'll start using it. Or I'm going to retire after 1 year. Keep the car in your garage for 1 year. You may use it a little bit. I don't mind. Be careful. And after 1 year, once I retire, then I'll take and I'll be using that car, and it's for me, for the immediate or future benefit, direct or indirect, of the person. So I may take him for my direct benefit, or I may tell him, you know, it's actually please give it to my son-in-law and others for their use, etc. So I'm telling it it's basically for my indirect benefit. Instructions are mine. So see all the three legs of the transaction: a transaction or an arrangement. Arrangement may not be a transaction. It's a very wide term. It has wide connotation. Where a property is transferred or held by a person, first leg. Consideration is provided by, paid or provided by another person, and that property is meant, the most important leg, for the immediate or future benefit, direct and indirect, of the person who's provided the consideration. If all these three legs are satisfied and proved beyond doubt, then it can be treated as a Benami transaction. Let's take a simple example. A transaction where property is transferred to a person. So one Mr. A buys a house. Consideration for the property is when paid by another person. Bank. He takes a loan from Bank of India. He buys a house for 1 crore, takes a loan from Bank of India of 90 lakhs. Oh, so both the legs are satisfied. But come to the third leg. The property is held for the immediate or future benefit of the person who's provided the consideration. Who's provided the consideration? Part or major part of the consideration? Bank of India. So is that flat meant for Bank of India? No, absolutely no. That's just a simple loan transaction. Maybe they have taken a mortgage or a hypothecation of the flat. So this third leg is not satisfied. So obviously bank loan and buying a flat based on bank loans would not come within the ambit of Benami transaction as such. Neither giving loan to somebody or giving a gift to somebody and he buying a property may not come under Benami. The third leg has to be satisfied. So it may not come under the provisions of Benami. I'm repeating this point perhaps for the last time. Please ensure all the three legs are satisfied. Okay. Now, so I just told you that a transaction or an arrangement of property is transferred. So there is a maxim, the concept in Latin, redendo singula singulis, which means transaction will go with the word transfer and arrangement will go with the word held. It basically means in law is that, you apply the company of the words in which are flocking together. So whatever is the understanding of one word, the color of that may travel to the other word also. Now, if you see transaction or an arrangement, so both these words are like friends together, transaction and arrangement. So you'd follow the doctrine of nociter esocis, which means you take the color from the company of one another, and it is from that you derive meaning for one another. Just a little bit of legal maxim in these things. That's why I said transaction, transferred, and arrangement held. Okay. So this is simple to understand. Property bought in someone else's name, money provided by somebody else for the benefit of that somebody else. Now, in the Indian context, if I just say that 29A was the definition of Benami, perhaps every household or every second household will find violation of Benami. Why? Husband buys the property with his money. I wouldn't say buys, but he buys the property in the name of his wife. I'm just taking an example, friends. Husband buys property in the name of wife. We Indians, we normally by default put the name of spouse and property, residential house. So it is bought in the name of the wife, money provided by husband, and husband is also going to stay in the house, obviously, logically. So that means all the three legs are fulfilled. So that means that's a Benami transaction. Now that could be draconian. This is happening in every second house. Or the money can come from the HUF, or even in a company kind of a situation. Or you buy a property in the name of your child, or brother, sister, or lineal ascendant or descendant, father, mother, and somebody else is providing the money. So that can lead to attracting the definition of 29A. So 4 exceptions were carved out. That these 4 will be exceptions. They will not be hit with the definition of Benami. And what are these 4 exceptions? Property held by a Karta or a member of an HF. So it is for HF. That means it is for Hindu undivided family. So obviously Christians and Muslims are out of this. So property held by a Karta or a member of an HF. Okay. So he bought a residential flat in the name of the Karta or in the name of the member of the HF. And the property is held for the benefit of, you know, members of that HF. Or the property is held for the benefit of the Karta or that member in whose name the property is bought, movable, immovable, or the benefit of the entire family, whatever. And the consideration for such property has been provided or paid out of the known sources, not known sources of income, known sources of the HF. So supposing the Karta buys the property in his name for his benefit or even for the members of the HF benefit, but he has not paid for the money. The money has been paid by the HF. Then though you may feel that Benami is attracted, but fortunately because of this exception, it is not attracting Benami, but the condition is it should be out of the known sources of, not income, the known sources of the HF. What should be out of the known sources? The payment of that fund. So payment went from the HF's account, property bought in the name of the Karta individually in his name or any member's name. So it will not be a Benami transaction. Now friends, when the bill was drafted, they put the word known sources of income of the HF. Then the Institute of Chartered Accountant made recommendations that look, a person does not buy a property only out of his income. He can buy property from loans also. So please remove the word of income. And that's why it came to be known sources of the HF. Now friends, I'm going to correlate this with section 68, unexplained cash credit. What is important for this exception? What is important is that the property may be held by the Karta for his benefit or for the HF's benefit, and money provided by the HF out of known sources. Supposing the HF made the payment out of unknown sources. So this part is violated. That means you may not get the benefit of exclusion. That means you may come under the definition of Benami. That means that property can be attached, confiscated. How? Supposing the assessment of that HF, the ITO says there is some cash credit and he says, please explain this. And for some reason, the HF is not able to explain. And the AO says this is unexplained cash credit. Now, well, friends, I don't want to enter into an argument that unexplained cash credit is unknown sources. We can get into this controversy, but I'm just trying to highlight certain things. If it is unexplained, as per the AO, you may go in appeal or whatever. If it is unexplained under 68 and whatever consequences follow under 68, perhaps it can be said, this is not from known sources, it is unknown, it's unexplained cash credit. The department may take such a stand because the Benami Act is also as such administered by the Income Tax Department, by the DCIT, by the JCIT, by the TRO, etc. Only one authority is slightly different. So if it is unexplained cash credit and from that if some property has been bought, then maybe you may not get the benefit of this exclusion. So please be very, very careful of the known sources from where the HF is paying. So if it is a loan, friends, please keep your loan evidence very clear. If it is some funding from some source, please keep them very, very clear so that we know that this is a known source from which I bought this, from which the HF has given the funds to the Karta to buy the property in the name of the Karta for the benefit of the HF members. Please keep that flow very, very clear. Your source documents in your track should be very clear. First exclusion. Second exclusion, property which is held by a person standing in a fiduciary capacity for the benefit of another person towards whom he stands in such fiduciary capacity. Fiduciary capacity, friends, in the most simplest English language is a, a trust kind of a relationship, a trust relationship. So director in a company, fiduciary relationship, partner in the partnership firm, fiduciary relationship, executor of a will and let's say the other persons involved, fiduciary relationship, trustee and a trust, fiduciary, a trust relationship is there. Trust means mutual faith and trust. I'm talking of that trust. So trustees of a trust and directors and partners and executors, here you have a fiduciary relationship. Now let's take the most simple. I'll just read this part. Property held by a person standing in a fiduciary capacity for the benefit of another person, company, towards whom he stands in such capacity, and includes inclusive part, trustee, executor, partner, director, depository or participant, the DP participants, and any other person as notified by the central government for this purpose. Okay. So, director of a company, the company wants to buy a car. Same example, simplest example. And this is happening in so many private limited company books, and we see additions on this point. The company wants to buy a car. The company buys a car in the name of the director. The company makes the payment. It is meant for the company's benefit and not the director's benefit. Why do you buy a car in the name of a director and not in the name of the company? The client sometimes gives very strange answers. Oh, sir, the transport tax or the one-time tax, or different states may have different terminologies. In Maharashtra, we call it as a one-time tax or the RTO tax. Is very high if you buy in the name of the company. So we don't buy it in the name of the company. We buy it in the name of the director. We can save a few lakhs or a few thousands on account of those additional taxes. And so the company is making the payment. It is in the books of the company, but it is in the name of the director, and it is being used by a company. Well, technically, all the ingredients of 29A are fulfilled. But here, if you can prove that this is bought in a fiduciary capacity, it may be a violation of the state transport laws. There may be some other violations, stamp duty laws or whatever. But if you can prove the fiduciary relationship, if your resolutions are properly drafted, you have some supporting documents to justify that, look, the director has bought it in his name in a fiduciary capacity we had with the company, and the company has paid and the directors provide the car to the company only, circumstantial evidence also, then this will not come under Benami. Similarly, for a partner and a firm, the partnership firm making the payment, buying an office, but office bought in the name of a partner, the element of fiduciary capacity should come. So friends, when these documents are drafted, those of you who practice in drafting, when you're drafting and you have recitals to a document, please ensure that the fiduciary aspect is coming out very clearly in your draftings, so that a prima facie, a cursory reading will show that though the property is bought in the name of Mr. A, it has been bought in his capacity as a fiduciary agent or a fiduciary capacity representing the main person, that is the company or the partnership firm or whatever it may be. Properties are bought in the name of a trustee but funded by the trust, meant for the trust. Please mention the resolutions and please mention in the body of the agreement the fiduciary capacity. So right now in this definition there is a slight dichotomy. It says property held by a person, fiduciary capacity, etc., and includes. Now that is the inclusive part. So they are only giving some examples. Includes what? Trustee, executor, partner, director, depository, or any other person notified by the central government. So inclusive definition you understand. So the first part is exhaustive. Will all fiduciary relations come into this, or will only those fiduciary relations which are mentioned over here, they will come into this? Friends, my humble opinion, there is a little controversial issue over here, because we understand what is the meaning of an inclusive definition. But I would still say in the current times, to avoid any controversy, it is better that this definition is restricted to what is mentioned over here, namely only trustee, executor, partner, director, depository, or anything else notified by the central government. Okay, so that's the second exclusion. Now the third exclusion. The third exclusion is property held by an individual in name of his spouse. I just gave you at the beginning of discussion, I told you. So held in the name of his spouse or in the name of his child, and the consideration is provided by that person out of his known sources, then this will not be a Benami. So that means I'm providing the consideration, property bought in the name of my spouse or my child, and I paid for the consideration, and obviously for my benefit also. It will not be Benami provided it is out of my known sources. The same logic of section 68 applies here also. So the individual, the husband has made the payment, let's say given it to his wife or paid it directly to the builder, and the property is bought in the name of the wife, and the husband is also staying over there. Prima facie, no Benami, I agree. Or property bought in the name of the child, prima facie, no Benami, provided the payment has been out of known sources, not known sources of income, known sources. Same logic of section 68 Unexplained cash credit and unexplained money or unexplained investment should not come into action. So be very, very careful in such assessments. Nowadays 148s are being issued. AO is asking information, how did you buy this, how did you buy that, otherwise he'll be issuing 148. Friends, be very, very clear, and I would suggest, that's just my humble suggestion, use affidavits on oath to justify whatever you're trying to say. So this is the third exception: property held by a person in name of his spouse. Spouse should be there at the time of the transaction, or in the name of his child. Now, what do you mean by child? So the definition of child is not given under the PBPT Act. The definition of child is fortunately given under 2 subsection 15B of the Income Tax Act. And it includes a biological child, it includes an adopted child, and it includes a stepchild also. And as per a particular citation which I've given it, it includes the illegitimate child also. So there can be a lot of variations in the definition of the word child. And friends, child does not mean a small 3-year-old toddler. A 60-year-old person is also a child in the eyes of his parents. So child can be anything, not necessarily minor. It can be a major also. For the father and mother, that 50-year-old person is a child for him. That's my child. So it's in that context the word child has been used over here. Okay, so you can buy it in the name of your spouse or child, provided it is out of known sources. And now the last exclusion. So the first exclusion was Karta NHF. Second exclusion was fiduciary exclusion. Third exclusion, bought in the name of the spouse or the child. And the fourth exclusion means this is not falling under Benami. So wherever any property is held by any person in the name of his brother or sister. Earlier I spoke of spouse and child. Now I'm saying buy a property, mobile, immobile, whatever, in the name of brother or sister, or lineal ascendant or lineal descendant, such that I have contributed the money and I bought the property in the name of my brother or sister or lineal ascendant and descendant, such that the name of the individual who's contributed along with his brother, sister, lineal ascendant, descendant, their name appear as joint owners in any document through which you purchase that property. The name of the contributor and the brother, sister should come, not only in the name of brother and sister, my name should also come. Who am I? I am the contributor of the money. So the consideration for such property has been paid or provided out of the known sources of the individual. I'm the individual, let's say. So that known sources remains the same. So I can buy a property with my funds in the name of my brother, sister, lineal ascendant, descendant, provided my name should also be there in the agreement, and it can be for my benefit also, obviously. Held in the name of someone, consideration provided by me for my benefit. This will not be a Benami if the conditions mentioned over here are satisfied. Brother means what? Brother means having one parent in common. Step brother over here is not a brother according to me. I am repeating. Step brother is not a brother for this part of the definition, in my humble opinion. I've quoted a case law just for your academic knowledge, friends. But otherwise, half brother, brother means having one parent in common, will come in the definition of brother. But what is important, friends, is that the name of the contributor, the person who's contributed the money, should be there in the agreement. Now, friends, look at this. We always use the word lineal ascendant, lineal descendant. What? It comes from which act? It's section 25 and 26 of the Indian Succession Act. Indian Succession section 25, lineal consanguinity, sorry. Descendant in a direct line from others. So one common line, grandfather, father, son, grandson. This is lineal descendancy, and this word's ascendancy. That's lineal descendancy. Lineal consanguinity is the proper word. Descendant in a direct line from the others, various degrees. Degrees means grandfather, father, son, grandson, etc. But sometimes we say, oh, he's my, my uncle's son, and my great grandfather had 2, 3 brothers. That is known as collateral consanguinity. But that means descendant from a common stock of ancestors. There's no direct line. It is descended from a common stock. So grandfather, 3 brothers, and then their children, and then their children, and then their children. So down over here, you cannot say this person is a lineal descendant of this person. No, they are coming from a common stock of ancestors, but that is not lineal descendancy. It's collateral consanguinity, which is different from lineal descendancy. So for those of you all who want to go a little bit more deep into it, you can refer section 25 and 26. Yes, an interesting point which normally comes up in this is, in lineal ascendancy and descendancy, we only talk about grandfather, son, grandson, great grandson, etc. What about a lady? Grandmother, daughter, daughter's daughter, great granddaughter. That is also in one line. So is it only male dominated? Or it cannot be female dominated? There is no lineal ascendancy, descendancy in a female tree. Is it only in a male tree? It's a very complex topic I'm touching upon, friends. I could only find one judgment to the best of my understanding and memory, wherein even the female tree could be identified in the lineal ascendancy descendancy version. I will not take the discussion further beyond, because I'll be entering into highly debatable waters. I really don't want to do that for the moment, because there's a lot in Benami we have to understand. But I leave it open for the audience for further research on this. I would say it is lineal ascendant descendancies on the male part as well as the female part. What I want to say is that buying a property in the name of brother, sister, lineal ascendant, lineal descendant, joint with the person who's contributing from his known sources, no Benami. Otherwise, there will be Benami. So that's 2 subsection 9 and 4 exclusions to it. That was 29A to be precise. In the backdrop of what I've told you, friends, you just need to be a little bit, just do a little bit more detailed study on this part. Read it a number of times with what I've told you. It may give you good dimensions in thinking that, okay, yeah, this is not, etc. The 3 legs of 29 are important and the 4 exclusions are important. That's 29A. Now let's see what is 29B. B, C, and D are just 2, 2, 3, 3 liners. So they're very simple to understand. B, C, and D, whatever I've written on the screen, this is a Benami transaction. Full stop. Don't apply your mind beyond it. Let's see what is B saying. A transaction or an arrangement. Oh, okay. In respect of a property. Okay. Carried out or made in a fictitious name. Simple. There is some transaction. Whatever transaction involving property, obviously. And in any transaction, there are parties, which is carried out in or made out in a fictitious name. So transferor and transferee, he may be fictitious, he may be fictitious. I don't know, both may be fictitious. If there is any fictitious party, fictitious name in a transaction or an arrangement, that is Benami. Now we understand why KYC is important. Now we understand why ITO say capacity, genuineness, identity is important. Identity is very critical. Identity establishes a lot of things in transactions, and that is why whenever documents are being drafted, the first clause of any document is whatever, supposing it is a conveyance or a lease agreement or a affidavit or a gift deed or whatever it may be, the parties are described. This gift deed is made between Rajesh Sanghvi, son of Babulal F Sanghvi, age 50 to 53 years, PAN number, Aadhaar number, residing at so and so. You're giving complete identity of who's the donor, who's the donee, or who's the transferor, and who's the transferee. You want to prove they are not fictitious people. That is, you're giving his name, you're giving his age, you're giving his father's name, you're giving his PAN, you're giving his Aadhaar, you're giving him whatever you want to. Please expand. I leave it to you. The transaction is in fictitious name, you had it. Next. A transaction or an arrangement in respect of a property. Friends, sorry, I'm just stopping for a moment. Friends, even I'm just thinking loud. I'm just thinking loud. Please forgive me. Intuitive thinking. Taking a loan from somebody, taking a gift from somebody. Of course, gifts are subject to 56(2)(10). So I can't take it from outsiders. I mean, I can take it, but I'll be taxed as the recipient. But loans and all that. How about even having photographs of that person? Of course, the Aadhaar contains a photo, the PAN contains a photo, but how about my photograph with that person? I mean, he's given me a loan, no? So I know him, of course. Look at my photo. I know that sounds too dramatic, that, oh, you have to click a photo with a person from whom you have taken the loan. I wouldn't say yes, you have to click, but I'm just thinking loud, because I'll have to prove, the onus of proof of a lot of things is going to come on me, and that may happen 10 years down the line. In the PBPT Act, like income tax, there is no 3-year or a 10-year limit. No, a PBPT violation of 2017 can be detected in 2030. And in 2030, you'll have to prove that you didn't violate 29A, 29B, 29C, 29D. You'll have to prove many things. So just suggestions. Now let's see what is 29C. A transaction or an arrangement in respect of a property. See, everywhere the word transaction or an arrangement, because very often people, what people say is, oh, we didn't do this, I just have an informal arrangement with my friend. I didn't buy it in his name, it's just an informal arrangement I have with him. Okay, you keep the car. And people may have strange answers. I'm just thinking loud. So that's why they use the word transaction or arrangement everywhere. A transaction or an arrangement in respect of a property where the owner of the property, so that BMW car was in the name of someone, or supposing there is a sweeper, or there is just a driver, and he's having 100 acres of land in Chennai. He's the owner officially. His name is there. A transaction or an arrangement in respect of property where the owner of that property, that driver or the sweeper, he is not aware of, or he denies knowledge of such ownership. And you ask that driver, sweeper, you got 100 acres of land in your name? He gets a shock. Sir, I'm earning 10-15,000. How can I afford 100 acres? The government servants tell him, look at this agreement. See, this is your signature. This is your photo when you went for a biometric at the registration office. Is this not your photo? Is this not your signature or thumb impression? And he looks at it and says, sir, yes, this is my photo, my thumb impression, my signature. But sir, I don't know anything about this land. I was told by Mr. XYZ to come and sign. He is my boss. He's paying me salary, or he paid me 1 lakh rupees for this, and I went and I did it. Read the definition once again, 29C. A transaction or an arrangement in respect of a property where the owner of the property is not aware of or denies the knowledge of such ownership. That can be Benami transaction, that can be. So this example of a driver or sweeper 100 acres in Chennai, I just took it as a one-off example. Let me take a bit more matured example. There is a search under 132 at a assessee's residence, and the lady members are called, and they ask, okay, madam, do you know in which firms you are a partner? Being a partner is a property, corporeal, incorporeal, tangible, intangible. It's a property. So they ask the lady, do you know you're a partner in which firms? No, sir, I don't know. You're holding shares of any company? Do you know which shares? No, sir, I don't know. Do you hold jewelry? Ladies know their jewelry very well. So that she'll tell honestly. Okay. Do you know you have given loans to any people? Giving loans is a property. No, sir, I don't know. Okay, fine. Do you know that what are the properties that you hold, immovable properties? She'll say, I live in this house, that's what I know. Oh, so do you have a residential flat? Anywhere abroad in New York, Paris? No, sir. I don't know. I've never been out of the country. I'm just taking an example, friends. Next question, or perhaps next answer. But sir, my husband takes care of all the transactions. He may be knowing. Look at what she said. Now that lady is a partner in a firm. She's got a lot of shares. She's got multiple demat accounts. She's got multiple bank accounts. She's got multiple FDs. She's given many loans to many people, and she's having immovable property all over the world. Everything declared. But she doesn't know it. Read the section once again. A transaction or arrangement in respect of property where the owner of the property, that lady, is not aware of or denies knowledge. You mean all those transactions have become Benami? Friends, no. I personally hold some reservations. A person may not be knowing a lot about his transactions because somebody close in the family is taking care of the transactions. Somebody close in the family. It's possible. That's the way Indian societies work. Friends, how many of us would also know how many shares I have in my demat account? Script wise, number of shares, sorry, I wouldn't know. So it's not that everybody in the family knows. That's why sometimes, just on a very lighter note, I tell my clients, please, every year after 31st March, when the balance sheets are prepared, call all the family members. They should know their balance sheets. They should know what are their assets. And if somebody is acting on behalf of the other people in the family, the ladies members, perhaps a power of attorney, based on a power of attorney, transactions can be done. But it is possible that certain people, maybe a lady member, maybe a aged person, may not be aware of, or may really not know, perhaps may deny also that I don't know. But friends, I wouldn't say only that much is enough to put it in the category of Benami transaction. I'm talking of these kind of slightly genuine situations, which are family kind of situations, which may happen in real life. That doesn't mean this law has to become so draconian that in the sweep it will take away everything as Benami, because all the properties will get attached and confiscated. So it's a mix kind of a situation, but I don't feel the law is meant for these kind of situations. But yes, the driver and the cleaner and those kind of situations, yes. And look at point number D. A transaction on an arrangement in respect of a property where the person providing the consideration is not traceable or is fictitious. Providing. So जिसने पैसा दिया है, the person who's given the money, me, supposing I'm the real owner. So the person who has provided the consideration is not traceable or is fictitious. Anybody, the real owner, whomsoever has provided the consideration, he is not available or it is fictitious. So that's 29A, 29B, and 29C, and 29D. If a transaction or an arrangement falls into any of these, it is a Benami transaction. If it is Benami, there is a real owner, there is a Benamidar, and there is property. The consequences of the law will follow. There are only 4 exclusions, and there is one more exclusion, friends. One more exclusion, and that exclusion is exclusion. So it will not be a Benami. So supposing there is any transaction involving the taking of possession of any property, which is under 53A of TOPA, Transfer of Property Act 1882. We read this section a lot. So in fact, the next slide I've kept for this only, just to show you all what is 53 of Transfer of Property Act. Friends, this section is a lengthy section. It is available in the Transfer of Property Act, and we are not aware to discuss Transfer of Property Act 53A. What is part performance? What are the ingredients? The transfer has done some part performance, etc. No, that's another thing. I don't want to come to this. But what I want to tell you is, friends, if there is any transaction wherein somebody has been given possession of a property in part performance as per section 53A, then If consideration has been paid or provided, stamp duty on such transaction has been paid, and the contract has been registered, then it will be out of the ambit of Benami law. Otherwise, it may get hit with Benami laws. I'm repeating. Condition number 1, consideration for such property has been provided by the person to whom the possession of the property has been allowed, but the person who is granted possession thereof continues to hold the ownership of the property. If this is sounding too complicated, friends, let me give a simple example. I come from Mumbai, the state of Maharashtra. Supposing there are some government flats. Those flats are allotted to some hutment dweller. A person is having a hut on the road. You see, metropolitan cities have these problems, slums. So some slum dweller is allotted a flat by the government. He's very happy. The condition is, look, Mr. Slum Dweller, you cannot sell this flat for the next 10 years. Okay. But what happens? These slum dwellers will sell away that flat. Is it a legal sale? No, it's not a legal sale. It's not allowed till 10 years. So, example, I go to that slum dweller. Rajesh Sanghvi goes to the slum dweller and tells that slum dweller, I'm ready to buy a flat. I'll give you 50 lakhs. He's so happy. He was staying on a slum. Next year, he got this flat, which he cannot transfer for 10 years. He says, okay, sir. I tell him, make these documents. I get them notarized. I gave him 50 lakhs, cash or whatever. That poor fellow will be very happy in cash. I'm just going on a hypothetical example, friends. Please. I repeat, don't catch my words. Just a hypothetical example to explain a point. He takes the 50 lakhs cash. He goes away. He gives the keys of that flat to me. Flat, property. Consideration for such property has been provided by the person to whom the possession has been allowed. I've got the possession of that flat. But in the government record, the flat remains in whose name? Slum dweller. Does the flat get transferred to my name? No. Why? It's a government restriction. Up to 10 years, you can't transfer. I'm talking of something in Maharashtra. I may not be well versed in the laws of South India, Tamil Nadu, Karnataka, etc. Well, I've not paid stamp duty. I've not registered that agreement with the slum dweller. You may fall into the definition of Benami. If this transaction is detected, your property can be attached, confiscated. But if condition 1, 2, 3 is established, condition 1 is getting established because I've given him money and the possession is with me, but the name is, his name is there on the government record. Yes. But if you pay the stamp duty and if you register that agreement, then you can be out of the rigors of Benami. So this is one more exception. Part performance is what I told you, and this is what I've just explained to you. Any transaction, consideration given, possession may still be in the name, possession, uh, you know, I'm in possession, but the property may still be in his name. If it is stamp duty and registered, then there's no problem. Now, this example, friends, this kind of examples of slum dwellers and all that, typically, in a lot of parts of this country, you find people doing transactions based on power of attorney. Now, they've got this word, power of attorney. So they take a power of attorney from the slum dweller. Rajesh Sanghvi will take a power of attorney from that slum dweller. Pay him money, tell him go. Possession of the flat comes to me. I don't register it. I don't pay stamp duty. Based on power of attorney, a lot of transactions are being done. And in a number of cases, friends, we have seen, like the Suraj Lamps case in 2012, the Honorable Supreme Court has also come down very heavily on this kind of power of attorney based transactions. Here in Maharashtra, if your power of attorney is taken from a person, it has to be registered also if it involves any immovable property of the value of 100 rupees or more. So if somebody thinks that he will make a power of attorney, take all the powers from the slum dweller, and he will just go to a notary and get it notarized or whatever, and that is a sufficient document, in my humble opinion, answer is no. No. And he will face the rigors of the Benami Transaction Act. This is what I just told you. The example which I took of the slum dweller, etc. A buys a property from B. B is a slum dweller, such that A takes a power of attorney from B and pays B consideration of, let's say, 50 lakhs. Physical possession is with A because he has paid the money, but the property is still in the name of B. B is a slum dweller. This may not really help. Now, friends, just a few sections from the Indian Evidence Act. This may be important to you in income tax, but it is important in the Benami Act. It's very, very important because in the Benami Act, you have two streams. There are two consequences of a Benami transaction. The first stream is, if there is a Benami transaction, means violation of 29A, 29B, 29C, 29D with the 4 or 5 exclusions. If there is a Benami transaction, then the government servants, we call them IOs, they will attach the property and you'll have to defend your case. They will confiscate, they will levy the fine on you. That's one leg. The second leg is they will start, the government departments, the Benami property unit, the BPU, Benami property, units, they will start prosecution against you and they will file a complaint with the relevant court, special court, let's call it sessions court. They'll file a complaint over there. And then you have to appear before the sessions court and take a bail. So this leg is going on. Simultaneously, the other legs also start. So we have a civil angle, we have a criminal angle. And once the criminal angle comes into action, CRPC comes into action, Criminal Procedure Code, and rules of evidence are very important. That's why I'm just introducing these few sections to you all. Indian Evidence Act. So whenever any fact is, especially in the knowledge of a person, friends, you can use this in income tax also to a certain extent. Huh? Though the rules of the Evidence Act are not strictly applicable for income tax, in my humble opinion. When any fact is in the knowledge of any person, the burden on proving that is on him. If it's in my knowledge, I have to prove it. Okay. Section 107. It's so interesting. Sometimes, people say that, oh, you got a loan from Mr. X. Yeah, I got a loan from Mr. X. Where is Mr. X? Saab wo mar gaya. Sir, he's dead. Oh, he's dead. Okay, okay. His family, anybody? No, sir. Everybody died. So he gave you a loan and he died. Wow, very good. So you can't present him now. You remember transaction in a fictitious name? Perhaps that Mr. Dead may be a fictitious name. I don't know. But that's a very comfortable answer for anybody to give. Sir, he's expired. I can't present him before you. So let's see what section 107 says. When the question is whether a man is alive or dead, and it is shown that he was alive within 30 years, the burden of proving that he is dead is on the person who says, who affirms that he is dead. I'm just introducing these sections to you, friends. There's a lot of food for thought. It is shown that he was alive. So somebody would have shown that he was alive, maybe some family member. So if somehow or the other it is found that he was alive in the last 30 years and still you're saying he's dead, you prove that he is dead. Vice versa, section 108, where the question is whether a man is alive or dead, and it is proved that he has not been heard by 7 years by those near to him. Near to him would be his family, his parents, wife, these kind of people. Okay. So when the question is whether a man is alive or dead, and it is proved that he has not been heard of, his family has not heard of him for the last 7 years, the burden of proving that he is alive is shifted to the person who claims he is alive. So interesting things are there in the Indian Evidence Act. We should know how and appropriately as per law they should be used in the facts and circumstances of the case. Now, Benami transactions and sham transactions. Friends, sham is something else and Benami is something else. Benami is a genuine transaction. Benami is a genuine transaction. With the only difference that the real owner is in the background because he is paid or provided the consideration. The property is held by someone else in his name, meant for the benefit of the real owner. So it is a genuine transaction. Money has been paid, property has been transferred, etc., etc. So what is a sham transaction? What can be a sham transaction? Friends, a sham transaction can be something like a transaction of, let's say, a sale of a property between one Mr. A and one Mr. B, in which Mr. A is selling the property to Mr. B for 10,000 rupees. But the fact is, no such consideration is received. And there was never any intention to transfer that property to B. Now, this can be deciphered, this can be detected from the circumstances of the case. Let me try to refine my example and try to present an example, which is not a very good example. Please forgive me for that, but I'm just thinking of one. Supposing there's a sale agreement for a flat. I'm the seller, my friend is the buyer, some XYZ is the buyer. I sell the flat for 50 lakhs. So obviously that Mr. B, the buyer, will pay me 50 lakhs. Okay. And if there is an agreement made, yes. And in the agreement, normally you have a receipt also, no, that he paid me 50 lakhs. Yes. And so there you write some check number 22526 drawn on Bank of India for 50 lakhs. Yes, you write that. So you write that details and you make an agreement. Hang on. Has he really paid you 50 lakhs? Or have you just written a check number and some bank's name and some amount? What? Has he paid you the 50 lakhs? Or you're just writing in the agreement for the sake of it? Friends, how many of us would have received an agreement, consideration paid, but maybe for a due diligence we don't check? P means maybe I wouldn't check whether has such an amount been actually paid from the bank accounts, any receipts, discharge, etc., etc. I'm just trying to convey what can be a sham transaction in which actually consideration is not passed. Because I don't want to sell it to him and he also knows he doesn't want to buy. Then why are you entering into such a transaction? Can be for a number of reasons. But this is a sham transaction. This may not be Benami, but it is a sham transaction. Sham means where there is no transaction. It's only paperwork and paperwork. And Benami means there is a transaction, but there are Benami elements to it. Okay. So a transaction that 29D, friends, I was telling you, a transaction or arrangement in respect of property where the person providing the consideration is not traceable or he's fictitious. Okay. Now, friends, the Act does not provide any time limit as to how far back the enforcement agencies, the Benami property units, they can go to trace the person who's provided the consideration. So very often people say, the officers may ask you, you bought this land? Yes, sir, I bought the land. How much did you buy it for? 1 crore. So who paid you 1 crore? Sir, I got a loan from my friend. Very good. What's his name? His name is some XY, Mr. Mohan. Okay. So where is he? Can you produce him before us? Do you have a loan confirmation? Can we see his PAN? Can we see his Aadhaar? Can we see his bank statements? Can we meet him? We want to record a statement. That person who provided me the money, that loan party, that friend, is not traceable. And as I've told you on a humorous note, an answer can be, sir, he's dead. Dead, so where is the question of presenting him? So he's not traceable or he's fictitious. The Act does not provide any time limit as to how far the enforcement agencies can go and trace the person who's provided the consideration. These questions can come up after 5 years, 10 years. How will you find the relevant documents to prove that he's traceable or not traceable? A person may have acquired some immovable property by making borrowings, and the liability of such borrowings has not been repaid. And the person who's lent the money is not traceable. When the authorities take action, friends, what to do? These are issues. At times, there are Benami, there are cases where there are only loan entries, and I was using the word loan entries because they were not genuine loans. So they were only loaned entries. So when there's a loan, logically you have to repay the loan. Logically you have to pay interest, and logically there may be TDS, Nothing like that is there. And then you ask the loan party, oh, sir, he's not available. He's traceable. He's gone to his village. He's left the country. He's dead, and some strange answers. Friends, confirmation, PAN, Aadhaar, IT return, photographs, keeping in mind 29D. It's important because income tax cases are getting converted into Benami cases. In your balance sheet, there are some loans taken. You bought a property and there are some loans taken, and the IT asks you this question in the normal routine assessment. Did you buy this property? Yes. Friends, remember in 29B, 29C, and 29D, 29A had 3 legs. Property bought in the name of someone, consideration provided by the real owner, and the property is meant for the real owner. But in 29B, 29C, and 29D, these 3 elements are not there as such. If you read per se the definition, you just find these 2-3 lines which I just showed you. You just find this Benami transaction 29A, all what I told you with 4 exceptions. 29B, C, and D. It's only that. Where is it coming out that on a fine reading of the section, and that's my opinion, where is it coming out that meant for the person who provided the consideration? No, 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 no. It's only this. And that's why when you read condition D, a transaction or arrangement of property, even if the person is not traceable, uh, well, it can become really difficult. And so the IT is asking a question that you bought a flat? Yes. Who provided the consideration? Sir, I took a loan. Is he available? That loan party? Not traceable, sir. He's not available. ITO says that's a fictitious loan party or is not traceable. A transaction or arrangement in respect of where the person providing the consideration is not traceable or is fictitious. Look at these most simplest examples. X gives a loan of 2 lakhs, sorry, cash 2 lakhs to B to deposit in B's account and to return it back to X. The demonetization story all over the country happening. You heard so many stories about this. I had old notes, SBN notes, gave it to my friend, deposit in your bank, later on give it to me. Name lending, friend, name lending, cash, definition of property, meant for my benefit, direct or indirect at a future date. X buying a car with his money in the name of his cousin. Friend, cousin, brother. But I told you the definition brother was real brother and sister and lineal ascendancy, descendancy. Cousin brothers don't fall into this. So if I buy a property with my money in the name of my cousin brother for my benefit, Benami is getting attracted for my benefit. That is important, friends, those parts. Okay. X buying a flat in the name of his uncle, auntie. They are not lineal ascendant descendant. Niece, nephew, son's wife with his excess funds. For the benefit of X, friends, the 3 legs should all be complete. It may attract Benami. I'm not saying that X cannot give a loan to his uncle, auntie. X cannot give a gift to his uncle, auntie to buy flats in their name for their benefits. Yes. X can give a loan to his uncle so that the uncle can buy a flat for the uncle's purpose, and uncle writes a bill. After my death, the flat goes to X. I wouldn't say all that comes under Benami, because in Benami, intention is very critical. If you really want to understand Benami to its depths, please go down to the intention factor also. My money, asset in someone else's name for my benefit, direct or indirect, immediate or in future. Friends, look at this example. X investing in an IPO with his funds, but in the name of his brother, and shares coming in into brother's demand. Sometimes there are IPOs. I can make only one application, but I tell all my friends and cousins and everybody in the family, 30 people, everybody make applications. I'll provide you all money for the initial amount. 30 applications go. Friends, cousin, brothers, everybody. And 20 of them are allotted shares. And then I take a off-market transfer from the demat into my account. I hope you're understanding what I'm saying. Sorry, I don't want to go fast on this. So off-market demat transfer, and I take the shares into my name. If they're getting a refund, they pay me the money back. Otherwise, I spent the money for those and for that IPO, and shares went into their demat and they've come to me. And then I'm having so many shares which I can sell off. With all due respect, friends, this can attract Benami. This can. Even with real brother, unless your demat account is jointly held with him. Please remember that exclusion which I was telling you. There should be joint ownership. So if people are thinking that even if you buy it in your brother's name, where is the question of Benami? Friends, read that exclusion part very well. It should be in joint names. So the demat was account was only in the name of the brother. There was no joint name of me. I am the contributor. Benami may be attracted. This is the example which I took. Sometimes people think that, oh, if somebody else is paying for a flat in someone else's name, is Benami attracted? No, this is not enough information to decide. There can be so many transactions. I want to buy a flat and my friend makes the payment. Only on so much information can you say it is Benami? No, friends. No. Only on so much. Anybody can give me a loan. He can give the loan directly to he can make a payment directly to the builder or whatever. There can be a number of scenarios. 29A in its entirety with the 3 lakhs should be read completely. So the intention of the person paying the consideration is critical for Benami. Like that, so even banks are issuing the checks directly to the builder or to the seller of the house as a home loan. That doesn't mean this becomes Benami, because the bank doesn't have an intention to take the flat unless there is a default. And even if there is a default, they take out the flat does not mean Benami is attracted, because day one the intention was not to keep the flat meant for the bank. So that's the procedural aspect, friends. I'll just take another 10 minutes. Selva, maybe a short break thereafter.
Sir, please.
Now,
Let me know.
yeah. Once you know 29A, B, C, D, I spend some time so that you understand, because this is the crux. And that's why when clients are asking you, sir, I want to buy a flat. Should I put the name of my wife on that flat? Should I put the name of my brother? He's also contributing money. I want to put the name of my father also on the flat. Uh, you ask questions. Are they contributing money? No, sir, they are not contributing. Sab paisa mera hai. मैं paisa डालता है. And you remember 194 IA, you have to deduct TDS accordingly. When you're a buyer, you deduct 11% TDS. So if there are 3 owners, contributor of the money, Mr. A, his wife B, and let's say father. So you're going to deduct TDS how much and in whose hands? It's an important decision you're going to take. And so often till today, I find that in these kind of draftings, there is no care being taken. The entire TDS is deducted by the contributor, or maybe in the wife's name, or they take a bank loan also. Who is paying how much of bank loan? Who's sharing the EMIs? It's all disorganized. Friends, I don't mean that all these transactions are attracting Benami. I don't mean that. But what I surely mean is, when you're structuring a transaction, please ensure excellent amount of transparency. So if the wife's name is also there, that's just my opinion. If the wife's name is also there in a flat, or father's name, and you're contributing the money, you please transfer some amount to your wife's account. You can give a gift to your wife, no? That's not prohibitive in any law. You can give a gift to your father, and from there they can make the payments. A gift is always allowed. So yes, you can buy in these kind of family scenarios, which we've already seen in the exclusions and exceptions, but structure the deals very, very carefully, especially when there is some source funding coming in. So friends, who are the authorities who take care of all this Benami violation? Who's going to see all of this? So under section, you have the initiating officer. He's the main person. He's a ACIT DCIT rank officer. He's the main person, friends. IO. And then above him you have a JCIT level approving authority, and then above them you have a adjudicating authority, which was originally the PMLA adjudicating authority, which was only one authority based in Delhi. But from 1st July 2021, thanks so much to the government, for all these Benami cases, all over India, we had to fly down to Delhi to appear before the adjudicating authority. So now we have got adjudicating authorities at Mumbai, Chennai, Delhi, and Kolkata. And which is this adjudicating authority? Adjudicating authority is something like a superior authority. Friends, it is not a tribunal. I repeat, adjudicating authority is not a tribunal. No, it is only superior to the IO and superior to the approving authority. That's all. The next hierarchy. So you have a law known as SAFEMA, Smuggling and Foreign Exchange Manipulators Act, Forfeiture of Property. This 1976 law. I suppose you know the Coffee Posa era. So SAFEMA is the authority. They have a competent authority in SAFEMA. The same SAFEMA competent authority is now the adjudicating authority for sorry, not PMLA, PBPT. Okay. So now we have uh, adjudicating adjudicating authorities at 4 places in India, and then you have an administrator who's the TRO, and now you have the tribunal, which is the PMLA tribunal. PBPT does not have its own separate, independent, exclusive tribunal. No, the PMLA tribunal at Delhi, which is at Khan Market at Lok Nayak Bhavan, the PMLA tribunal, the FEMA tribunal, the FERA tribunal, the NDPS, the same tribunal is looking after PBPT also. These are the authorities. So section 19 of PBPT Act, these authorities, all these authorities are IO, approving, adjudicating, they have all the powers like a civil procedure code. When they're trying a suit, they can summon, they can enforce attendance, they can examine a person on oath, the way 131s happen. They can call for production of books of accounts, they can issue commissions. Friends, what do you mean by issuing commission? Look at this word, issuing commission. Means they can send an officer to check certain facts, like the court issues commission. They can receive evidences on affidavit. Just a word of suggestion, caution, in PBPT proceedings and to some extent even in income tax proceedings, friends, please use affidavits. Section 148A notice is coming, you want to give replies, whatever you feel, something you want to emphasize, use affidavits. In section 19, all these authorities, they have right to receive affidavits and affidavits on oath also, so one can use in these kind of proceedings, affidavits should be used extensively. So all these authorities, they can call for information and they can enforce attendance from not only people, banks, intermediaries, and they can take the help of police, and they can take the help of so many other authorities as are permitted under the law. Reporting entities is a word which is used in PMLA. So they've got vast powers under section 19 to call for information from sub-registrar, land records, you know, banks, etc. From number of places they can call for information. Okay. The initiating officer, approving authority, adjudicating authority, they can require any government officer to furnish information to them on any point. On any point. And they've got powers. Who they? IO approving, adjudicating authority. They've got powers to impound the books of accounts or documents as they do in income tax, and they can retain them till the adjudicating authority passes its order under 26(3). We'll come to that, and they can keep it impounded even for a further extended time period. Okay, routine powers which they have. Section 23, the initiating officer, everything is being done by the initiating officer. He is like a AO. Classically, he is doing a lot of homework, paid work. So after obtaining approval from the approving authority, he can conduct any inquiry or investigation regarding any person, place, document, property in respect of any matters relevant. Now, this is preliminary inquiry. There is no proceeding still started of PBPT. IO ko somebody has written a complaint letter. Sir, this person has got so many properties for which he has paid the money and he enjoys the property, but it is in name of his friend, driver, somebody. The IO can start investigation, not of, I mean, discrete investigations, huh? And he's got the right to conduct inquiry, investigation, anything. He can summon government servants and start examining from them. So this kind of discrete investigations rights IO has. IO can also call the person if he so feels and examine him also. I mean, conduct inquiry. Now, this section 24 is the main crux. It is from here the PBPT proceedings start. This is something like section 24(1) is something like your 143(2) notice. Scrutiny proceedings have started. Your case has been selected for scrutiny. Your case under section 24(1) has been selected for PBPT, because if 24(1) is issued, that means the IO, on the basis of material in his possession, so he's already done the inquiry. Material in his possession, he's got reason to believe. See, the languages of 148. He's got reason to believe that some such person is a Benamidar in respect of the property. So the IO will record the reasons. Material in his possession, reason to believe. He will record reasons and issue. And not only issue, but he also has to do service of the notice. So he will issue and serve a show cause notice to the Benamidar, telling the Benamidar, look, this is a property, whatever, and you're the Benamidar, and he will also issue a notice to the real owner, telling them that this is Benamidar and why it should not be treated as Benami transaction and Benami property. And he's also supposed to give copy of that notice service by post or as provided under Civil Procedure Code. So fortunately, till now, we are not having email concepts over here. Unlike in the Income Tax Act section 282 read with rule 127, if I'm right, where email IDs and we are having issues in this. So this is by post or by Civil Procedure Code. He issues a notice under 24 subsection 1. Selva, I think so we can take a short break and
Yes, sir.
thereafter we can,
Yes, sir.
just
We'll take up
continue.
the question. Yeah.
I hope that's okay.
Just sharing my screen when you're ready, sir.
Yes, yes, yes. I'm okay to go, Selva. When you go.
Yes, sir. Give back the rights. Now we can- So visible, sir.
Visible? Right.
Yes.
Okay. This is the last leg now of the whole presentation. We'll be more on the procedures and some case laws also on this. But this is the most important section. This is the trigger point. Getting a 24/1 notice means, oops, the proceedings have started under Benami. And by default, experience has shown that the moment a 24 subsection 1 notice comes, that property mentioned in that notice, whether it is bank balance, whether it is investments, shares, fixed deposits, immovable property, is going to be attached. That's out of experience, is that what I'm telling you. So under 24 subsection 1, the initiating officer, I'll call him IO. As soon as he gives you notice under 24 subsection 1, literally at that point itself, he may provisionally attach the property. Attach, not confiscate. He may provisionally attach the property for 90 days from the end of the month in which the notice is served. Of course, with the approval of the JCIT, the approving authority. So there are a lot of checks and balances that a superior officer has to see. Now, 24 subsection 1, the IO has got 90 days time, 90 days time to conduct the first inquiry whether the subject property is Benami or it is not Benami. So the IO is giving a notice to the Benamidar. The IO is also giving a notice to the real owner. This is as far as he can identify, because it is very often possible that in a Benami transaction that the property is standing in the name of the Benamidar. So IO knows the Benamidar. So he issues a notice to the Benamidar. IO may not know the real owner, but if he can find out the real owner, he gives him also a copy of the notice. And very often initially they attach it and it remains attached till the end of that 90-day period. And on the completion of the inquiry, 90 days, the IO, if he has originally attached the property, he may continue the attachment or he may release it from attachment. Provisionally attached, 90 days inquiry, he feels no, this is not a Benami property, it's all explained properly. The Benamidar has explained, real owner has explained, and anybody else involved in the transaction has explained it's not a Benami property, he may release the property. Or IO, if he is provisionally attached, after 90 days he comes to the opinion, yes, this is Benami property. So he continues with the attachment. Or the IO may not initially attach a property, but on the culmination of 90 days, or during that period anytime, or culmination, he can then attach the property. So the IO may continue attachment or he may do a fresh attachment of that property. And once the 90-day period is over, within 15 days, 1-5 from the completion of that 90-day period, the IO will refer the case, I'm repeating, refer the case to the adjudicating authority. This reference is done under 26 subsection 5. So IO is doing the entire spade work and it's a 90-day draw of specified period. So in a PBPT, the moment a notice comes, please, for heaven's sake, that's just my suggestion, don't take adjournments for, minuscule issues. You only have 90 days and you have to bombard the IO with maximum information, justifications, etc. He may have invoked 298, 29B, 29C, 29D, what he has invoked, whether you're falling in the exclusion, you're not following, the provider is traceable, not traceable, fictitious, please give everything to the IO and you have to cooperate. So this 90 days is critical. So after this 90 days, let's assume he has attached the property and it continues for attachment. Then he refers the matter to the adjudicating authority within 15 days of the completion. Now the matter travels to the adjudicating authority. I'm repeating, this is the reference of the case. It is not appeal. Adjudicating authority, not an appeal. It's just a superior authority as compared to the IO. And these attachments by the IO have to be done by the approving authority. So his approvals are needed. Now the matter travels to the adjudicating authority, the next level. IO level over 90 days. Now adjudicating authority. Earlier it was Delhi, now it is Bombay, Delhi, Calcutta, Chennai. Now once it goes to the adjudicating authority, I'll call it AA. As soon as the AA gets the reference from the IO, whatever is the material, notices, submissions by the Benamidar real owner, they get the entire file, the reference. We call it as a reference case. Within 30 days of getting the reference, the AA will give a notice to the Benamidar, to the beneficial owner, to any intermediaries who are involved in this, anyone who's involved, telling them, rather giving them minimum 30 days notice. Clear 30 days have to be provided to represent their case, to provide information, etc., etc. Now the adjudicating authority, AA, has got 1 year time to carry out its sort of to carry on its proceedings consequent to the IO's reference. It has got 1 year's time. So now a superior authority is going to examine the same thing again. I repeat, it's not appeal. So they will give a notice to everybody, and then you go down, you appear before the adjudicating authority. You may say, we presented these facts before the IO, we are again presenting it over here, etc., etc. I wouldn't say concept of additional evidence, but yes, if something new comes up, it is possible that the IO may say this was not there before me. He may object. He may file rejoinders. You may file sir rejoinders, and this process goes on for at least 1 year before the adjudicating authority. Now, what happens before the adjudicating authority is, once they give notice to everybody, they will give opportunity. They'll reappreciate the evidence. They will hear everybody concerned, and then they will pass an order under 26 subsection 3. So 24 was IO, 26 is a AA. And then they will pass an order under 26 subsection 3, either treating the property as Benami or not treating it as Benami. So release, the property is released. IO was wrong, the property is released. Or IO was correct and the property is Benami. And the attachment continues. Okay, so you got the time limit also. This is a specific 1 year time limit. Now in this 1 year, if I should not use the word assessee, but if the Benamidar or the real owner, they get some court order and then there is a stay, then that 1 year gets extended accordingly. Now in the process of this proceeding before the adjudicating authority, supposing the AA comes to know, oh, there is some other property, this should also be attached. The IO has not attached this property, but they realize that during the course of the adjudicating proceedings in that 1 year. So the AA may attach that other property also which the IO has not attached. That's attachment under 26(5) by the AA. And in this proceeding before the AA, new parties can be added as Benamidars or real owners, or certain parties' names can be deleted also. These provisions are also there because the AA is a superior authority as compared to the IO. It's more like a tribunal kind of a situation. With the A sitting at a high pedestal, and all things are presented before them and argued before them, and you have the IO's representative also arguing before the adjudicating authority, and obviously the Benamidar or the real owner argue that, your honors, this is not a Benami property, I genuinely bought it, it is meant for my use, I took the loan from so and so party, whatever may be the arguments for and against. Okay, so the adjudicating authority will accordingly pass orders either confirming or releasing the property. Now, once the adjudicating authority passes an order under 26 section 3, you file the first appeal before the tribunal at Delhi, which is the PMLA tribunal. If you file an appeal, till the disposal of that appeal, the property will not be confiscated. Otherwise, if the A passes an order, the property can be confiscated to the central government. So confiscation procedures are all mentioned over there, and the title goes to the central government. Okay. Now in this adjudicating authority also, sometimes people go to a court, writ petitions are there, they state, and there were some ordinances in the COVID period. So time periods were relaxed. This 1 year time period was relaxed and went up to 30th September 21 also, and things like that. There's been rearrangement of the adjudicating authority in the country. Earlier we had only the PMLA adjudicating authority was also the adjudicating authority of the PBPT. Then we have the SAFEMA adjudicating authorities. So because of this, certain time extensions had been given in the intervening period. Now the law is 1 year. So everything is term bound, and that's very good. 90 days IO, 1 year AA. Now 27 subsection 2. Friends, this is little important. 27 subsection 2 states what? It states that nothing contained herein will apply to a property which has been acquired by a person from the Benamidar for adequate consideration prior to the issuance of a notice under 24. So supposing the Benami gets a notice under section 24 attaching the property, can he sell away the property? Obviously no, he cannot sell. But before a notice under 24(1) is issued to the Benamidar or the real owner, whatever, that property has been sold off to somebody else for genuine consideration in a genuine transaction. That poor buyer did not know that subsequently a notice under 24(1) will be issued on this property, because that property was let's say an alleged Benami property. Remember we said that proceeds from the property and things like that. Supposing somebody has bought that property for adequate consideration, that BMW car or that residential flat is a Benami property, and the Benamidar, knowing that there's going to be some gadbad, knowing or unknowing, whatever it is, I should not use the word knowing, but he sells the property to me and I'm a genuine buyer. I've taken a housing loan and I buy that flat. Property, you know, the definition also includes proceeds. If I buy that property prior to a 24(1) notice, then I've got still a valid title, if you read it with section 57 of the PBPT Act. But if I buy a property after a notice under 24(1) is issued and I don't know that a notice under 24(1) is issued, then my purchase transaction can be treated as null and void. This is due diligence of a property which has to be done, friends. This issue is also there in, to some extent, in the PMLA Act. That means, friends, whenever you're buying properties or documents, you're drafting documents, ensure these clauses are there in your agreement, that the transferor hereby represents the property is not a Benami property and no notice under 24 or such other sections of the PBPT have been issued, etc. etc. Draft your clauses accordingly. Of course, even if you draft the clauses, but prior to you buying, a 24-month notice has been issued, then friends, all that I can say is that that's a slightly difficult time for the buyer who bought it in genuine. See what section 57 says. Notwithstanding anything contained in the Transfer of Property Act, notwithstanding clause or any other law, after the issuance of a notice under section 24, if any property is being transferred, it shall be ignored and deemed to be null and void when after a section 24 notice has been issued. Now you can't say, oh, I didn't know, you're a buyer, oh, I didn't know about any such notice, I was not told, the seller is very cunning, he didn't tell me about this notice. Friends, that's not an argument which may stand the test of the law. Due diligence has to be done, and I can understand you may have a lot of questions on this, but that is the law. That's the best I can tell you. So any right of any third person created in a property with a view to defeat the purpose, that shall be null and void. And once confiscation is taken, then the TRO takes the possession of the property. Of course, if you go in appeal, then confiscation normally does not happen. Now let's come to the first appeal, that is the Appellate Tribunal. The sections are 30 to 48. So what is the job of the Appellate Tribunal? It is to hear the appeals against the orders of the authority. Who is the authority? IO, approving, AA, adjudicating. These are the authorities. So against these orders, the Appellate Tribunal is supposed to hear appeals. However, section 46, which speaks about the appeals before the tribunal, which are the appealable orders, like our 246A, Which are the appealable orders? So there are only two appealable orders. What are those two orders? The first one is the order of the adjudicating authority under 26.3 and not under 26.5 or 27.1. Friends, what is 26.3? 26.3 means when the order of the AO after 90 days goes to the adjudicating authority and they confirm or they reject it, that is under 26.3. But during the proceeding before the AA in the period of 1 year, if the AA finds out some additional property which is Benami and the AA authorities attach that property also, that is under 26.5. Unfortunately, a provision of appeal has not been given over there under Section 46. Section 46 says appeal only against order of 26.3. It doesn't mention about 26.5. Or 27.1 is a confiscation order by the AO. Nothing of that. So the appealable orders are 26.3 and Section 54A, which is like a penalty, like a 271 1B and all that. You know, if you don't appear in a summon or if you don't give information, then penalties are levied. So that is 54A. So against these two, you can go before the tribunal. Okay. Now, Appellate Tribunal, it is not bound by Civil Procedure Code. It's bound by natural justice. Excellent. Chartered accountants can appear before this tribunal. Chartered accountants can appear before IO. Chartered accountants can appear, and company secretaries can appear before AA. They can appear before the tribunal, which is also the PMLA tribunal. And PMA also, as chartered accountants, we can appear. So it is based on the rules of natural justice. CPC is as such not applicable. Civil Procedure Code. So whatever evidence you want to give, you give documents, you give affidavits also. The tribunal can review its decisions. Reviews typically like section 114 of CPC. You have reference, review and revision. So section 114 is review. So the appellate tribunal can review the decisions also. Anybody is aggrieved by the order of the A. Anybody, IO can be aggrieved, or the Benamidar can be aggrieved, the beneficial owner can be aggrieved, or any third party whosoever is aggrieved, who's a party before the AO, AA. They can file an appeal before the tribunal within 45 days of the AA order. Tribunal has got these two members, a judicial member and a administrative member. There's something like a rectification of mistakes, which is like a 154. The tribunal or any other authority, IO, approving, AA, in any order, they may rectify any mistake apparent from record, and the time period for rectification is 1 year from the end of the month in which such order has been passed. Okay, that's rectification. Who can be authorized representatives before the tribunal and the AA? All these people. That means what is interesting for us is chartered accountants, etc. They can be. Of course, advocates can always appear because they have the law qualifications in place. So the first appeal is the tribunal. After the tribunal, the second appeal goes to the High Court. And like the Income Tax Act, questions of facts don't travel to the High Court. Question of law travels to the High Court, Section 49, and thereafter to the Supreme Court also. Now, here, friends, it is important. Like the way when you practice income tax, the routine assessments and your first appeal CIT appeal and the second appeal ITAT, High Court will be only a question of law and Supreme Court. So from day one, when you're making your representations before the IO, AA, and the Appellate Tribunal, your points should be determined and framed in a manner that you have questions of law also, so that if your matter travels to the High Court, the question of law automatically comes in over there. So this is High Court and then Supreme Court. Now, friends, you remember I told you in the beginning, IO, attachment, AA, Appellate Tribunal, this is one stream, one leg. The other leg is a special court, and here CRPC applies. So whilst you are before the adjudicating authority, and very often when you are before the tribunal, the IO may initiate prosecution. And you need prosecution, you need the permission, I'm sorry, not from the PCIT or PDIT, I'm sorry for that. The competent authorities, they can give you the permission for prosecution. Now, of course, prosecution under the Benami transaction, Benami law, PBPT law, is only if you want to defeat any law, you want to avoid any payment of statutory dues, you want to avoid payment of creditors, things like that, and that is why you entered into a Benami transaction. Basically, it is basically on these reasons that prosecutions are typically targeted. But I would say defeating any law is one such provision under which the IO initiates prosecution and files a complaint with the Sessions Court for starting CRPC proceeding. Now, friends, under Section 54, if anybody is summoned and he gives false information or false documents, then also there is prosecution and fine. And similarly, if you're not complying with any summons are issued under Section 19, then also this Section 54 is appealable before the tribunal. Now, friends, nothing in the act can render any person liable to punishment if he proves that the contravention took place without his knowledge. I'm talking of intentions and these kind of things. So we are talking more of the punishment aspect. Of course, the Benamidar is also involved. I'm not saying no, but very often issues come up, issues like the Benamidar says, sir, I'm a very poor person. I'm just a driver. How can I acquire 100 acres of land in Chennai? I didn't know anything about all of this, etc. So in prosecution, he may have some case out over there. One more thing, friends, is the Benami violation is not a cognizable offense. It's a non-cognizable offense, friends. Section 61. And when you read the Section 61 along with Section 155 and Section 2 subsection C of CRPC, you should know what is a non-cognizable offense vis-a-vis a cognizable offense. It is written it's a non-cognizable and bailable offense. So typically in a non-cognizable offense, a police warrant, a police arrest may not be there, but the matter travels to a court and there it is bailable, so you seek bail from the court. Now section 45 typically says no civil court shall have jurisdiction in matters concerning authorities or injunctions. So against a PVPT notice under 24 or against the adjudicating order under 26.3 or 26.5, we just can't rush to the city civil court of your jurisdiction. Yes, writ is possible, but you got a machinery and you go according to the machinery as per the law. You just can't go to a civil court. That is not permitted. Similarly, section 58, what I told you in the beginning is the PBPT Act is also applicable to charitable trusts or religious trusts unless the government says this is exempt. Now, friends, I told you at the beginning, you remember the fiduciary relationship when I was discussing 29A. I told you in a fiduciary relationship, it can be excluded. So trusts, charitable or religious, with all due respect, I don't mean to hurt anybody's feelings, but at times these trust concepts, public charitable trusts, may be misused. And so a lot of anonymous donations comes to let's say a religious institution, a temple or whatever, anonymous donation in the donation box, bhandara or whatever you may call it. And there's anonymous donation, you don't have names, and religious trust can receive anonymous donations. A charitable is taxed at 30%, but a religious is not. It is having the routine taxability under section 11, and that is used by the trustees for their for assets which are bought in the name of the trust but meant for the trustees, and the trustees are enjoying those assets, those vehicles for their personal use, or it's the trustees' money which is getting recycled coming into the trust and then being meant for the use of the trustees. A lot of things can be possible based on the cases which come up, friends. So the PVPT Act can be applicable even on temples and trusts and religious and charitable unless they are specifically exempt from that. As I told you, CS can appear over here. So the PVPT Act is in addition and not in derogation to other laws. So this will have an effect notwithstanding anything inconsistent in any other law. Proceedings will continue against the legal heirs. Of course, prosecution does not continue because if the person is expired, then there is no question of continuing prosecution on the legal heirs or the dead person. But the attachment and all those provisions continue. Friends, we already discussed Sham and Benami transactions. Just a few case laws. You see under the original Benami Act of 1988 and prior to 2016, you see the judgment of Meenakshi 1957. In these judgments, Supreme Court on the erstwhile Benami Act 1988, they discussed about concepts of, in this particular judgment, they discussed concepts about sham transaction vis-a-vis Benami transaction. What I explained to you, in Sham there is actually no transaction, but in Benami there is, but you have a Benamidar and a real owner. So these concepts are explained in this particular judgment. I won't go into this particular judgment. Bhim Singh versus Khan Singh is another judgment on the Benami 1980 case, and under the not really speaking under the 88 Act, uh, this was a judgment delivered, but this has spoken of certain well-established concepts of Benami in India, and it spoke about the concepts of intentions and things like that. So this is not per se so much on the 2016 Act, but sum and substance of Benami, what is critical in Benami, these issues come out in this particular judgment. So it's more of academic reading. Now you see in 2004, you see this judgment of Baliamal. Here, the apex court has very beautifully given 6 circumstances. This judgment is 2004, so prior to 2016. So consequent to the 1988 Act, 6 circumstances which can be taken as a guide to determine the nature of transaction. So specifically for Benami transaction, this can just be a guide, from source from where the money came, nature and possession of the property, it is in whose possession, what is the motive, intention, the position of the parties and the relationships between the claimant and the Benamidar, who has got the title deeds, conduct of the parties concerned after the sale of the property. See, they're looking at the entire gamut of the case to decide whether something is really Benami or it is not Benami. But I'm repeating, this is kind of academic knowledge on these cases, concepts of intentions, and after all, the 2016 is the amendment to the 1918 Act. So we can have persuasive values from these judgments also, and it has been quoted in a lot of recent judgments also. The Mahalingappa case versus Savita of 2005 also. Here also it was held that the following finding of fact would conclusively prove that the transaction was Benami. So what are these finding of facts? Appellant paid the purchase money. You see, someone else was paying the money. Title deed was with the appellant, let's say the real owner. Appellant mortgaged the suit property for raising the loan. So this shows that the suit property was belonging to the appellant. Appellant paid for taxes. In this case, the property may not be in the name of the appellant, but he paid the money. It was, documents were with him. He mortgaged those documents. He was paying the taxes for the suit, etc. He let out the property on rent to some other people. Of course, the appellant bought the property in the name of some Benamidar, and the motive for purchasing the suit property in the name of the Benamidar was that the Benamidar was born on an auspicious day. Now, see, people come up with very fancied answers that somebody is a real owner, I'm the real owner, the property is bought in someone else's. Why did you buy the property in his name? You paid the money, it is meant for your benefit. Why did you buy in his name? He'll say, sir, his name is Krishna. It's a very auspicious name. He was born on Janmashtami day. So anything that I do it in his name, because there are a lot of answers people can give. So something like that was also mentioned over here, and this was an argument which was given by them. So the circumstances surrounding the transaction, relation, etc., all these are slightly critical. It's a good academic reading over here. Then in income tax also we find impact of these kind of Benami transactions. All these are prior to the 2016 judgment, but just see what they are saying, what is being mentioned over here. Vinayak Chaudhary versus ITO ITD Nagpur. The essence of Benami is the intention of the party. Once again, intention. The intention is shrouded in a thick veil which cannot be pierced through. Because when a person is doing a structuring of a Benami transaction, is going to take a lot of precaution, and there's a thick veil. So one has to break those veil and to actually find out. When there was no proof to establish necessary ingredients of Benami like contribution, enjoyment, AO could not be said to be justified in including income of sister concern PFI in the hands of SSE on the contrary. So it was like two firms, then the income of one, say Parekh Foods, was to be assessed in the hands of some other SSE. So saying that, okay, this is not so and so SSE's income, it is this SSE's income, so it should be clubbed over here, something like that, because it is Benami. But then you need proof to establish the ingredients of the Benami. It went in favor of the SSE. Again, I'm coming to the point that the ingredient part plays a little critical role. Let's see this Deshmukh case of 2010 of Bilaspur Tribunal. It was held that the A was justified in holding SSE as Benamidar of 1T and assessing the income computing in his case in T's hands. In view of the fact, AO observed that the SSE was partner in a firm controlled by 1T. So here you had one Mr. T. He had a partnership firm in which he put the SSE. and that person was controlling this partnership firm. And here the assessee was not a person of any means, etc. So based on that, the AO came to the conclusion that, look, this person who's a partner over here, or let's say this particular firm T, is only a dummy firm. Actually, somebody else is the controller. So he's the real owner. These are Benamis, and so it should be assessed in his hands. This was the stand taken by the AO, but these are 2010s and prior judgments. But these are only giving indications that how the logic of Benami is traveling, even under the 1988 Act, and all the more now under the 2016 amendment. See, where wife, daughter, employees, and friends or the associate or partner in a firm. Look at the real life situation. And in assessment proceedings of the firm, it was held to be bogus on the ground that the firm was managed by the assessee. You keep your wife as a partner, you keep your daughter as a partner, you keep some typist as a employee, as a partner, some friends. They're not having any experience of the business. They're summoned under 131. They can't speak anything about the business. So the question is, who's looking after the business actually? It is some other person who's the real owner. The firm was considered to be a Benami of the assessee, and income derived by the firm was accessible in the hands of the assessee. Now, friends, see how far certain cases are traveling. I'm not saying this is the law of the day. I'm not saying that. But this gives us indication that if things like these are happening, first of all, of course, Benami is any transaction which is Benami will face the brunt of the law. But there can be situations where a wife or daughter may be a partner because they have capital contribution. It is possible, and somebody else is looking after the business. But things should be properly documented by way of whatever appointment letters or salary and things like that to justify. Otherwise, conclusions can be drawn out in such kind of scenarios. Now, when the SSE with a technical background carried on business in a separate business premises employing labor merely because her main transaction supported by bills and accounts or with a company of which her father was the managing director, she should not be said to be a Benami of her father. Very often at one common address, you have a lot of firms, and you sort of distribute transactions among different firms, and control is with one party. It can lead to scenarios like this, where a person can be treated as Benamidar. Let's see what was over here, where the assessee's wife has been assessed for several years in respect of share of income from a firm, which has been granted registration, merely because during the search of the residence of his wife, she stated she did not know the name of the firm. See, this is the example I was giving you. She did not know the name of the profit. So there was a lady, she's a partner of a firm, but in a search you ask her, madam, you're a partner of which firm? Oh, I don't know. What is the share of profit? I don't know. That means she should be treated as Benami. I hold reservations, but we just have to be careful in these kind of scenarios. Merely because business is run by the SSE was being conducted by him from same premises in which SSE's husband was also carrying on premises. From the same premises, wife's business, husband's business. So it cannot be held that they are Benami of one another. Conclusions being drawn of Benami, but it cannot be held that easily. So when the government enacts any law prohibiting holding of something, it is also required to provide the mechanism or how to deal with the existing goods with their holders. Now, whether such an exit route was provided to the holders of Benami property. The answer is yes. The income disclosure scheme, friends, if you would have seen the income disclosure scheme of 2016, the sequence was first the IDS came, then Benami Act came on 1/11/2016, and then demonetization came on 8/11/2016. In hindsight, now when you see things, you see the flow. So under the IDS 2016, opportunity was given to all those holding Benami property to disclose the same and get it transferred into their name within 1 year. Such retransfer was exempted from the rigors of Section 6 of the Baenami Act. Sorry. So kind of an opportunity was given to retransfer. People took part in IDS scheme and many did not take because the tax rates were high also. Friends, typical additions we see under Section 69A, unexplained money, and it is attracting 115 BBE. That's about 75% plus 4% says that is 78% tax. If the IT department feels that the ostensible owner on record is just a Benamidar, the person who's there on record as the owner, he's just a Benamidar, just a name lender, and the real owner is someone else, then besides protective assessment or any such steps, PBPT may be invoked. A typical example where the department has a number of places invoked is a person receiving a loan and the person who's giving the loan openly admitting that I am just a name lender, sir. Or for example, I've issued a sale bill to a party and the party gives me a check payment. Fine, that's a simple sale transaction. But then that party is searched. Who gave me the check payment? I issued a sale bill. I sold jewelry and that party gave me a check. Simple business transaction. But when that party was searched, that party said, sir, I am only a commission kind of an agent. I got the cash. I deposited the cash in my bank and I gave Mr. Rajesh Sanghvi the check, and against that he gave me this invoice. There is no purchase of jewelry by me and there's only an RTGS or a check payment I have done. I got the money itself from Rajesh Sanghvi by cash and I returned the money back to him. Circular transaction. And I am only getting 1% or 2% out of this. Oops. Tone ein A ingredients may be proved over here, maybe. Now friends, retrospective applicability of the Benami Act. Kolkata High Court in the case of Ganpati Dealcom has said the law will be prospective after 1/11/2016. It cannot be retrospective, but this order has been stayed. The operation of this order has been stayed by the Supreme Court on 3/2/2020. So Kolkata High Court, Ganpati Dealcom, they said all properties acquired or what, or all transactions after 1/11 will be covered 2016, not prior to 1/11/2016. Kolkata High Court was also followed by this case of Deific Abode LLP, and they say, this judgment of Deific Abode, friends, we say that this judgment of Ganpati Dealcon, the operation was stayed. Now there is a difference between staying the operation of an order and quashing an order, and that is what was mentioned in the Deific Abode case. So there's a if the order has been stayed, SLP is admitted. SLP is just admitted over there. It does not become the law of the land under Article 141. So the lower court may follow a division bench judgment, and they may accordingly pass the same order as per the doctrine of precedent. This was the argument. What is the difference between quashing of an order and stay of an operation? And remember, Ganpati Dealcom's order was stayed. I wouldn't say quashing of an order. It's an academic discussion which I've written over here, which can be circulated. It's all available on the net. So Ganpati Dealcom prospective application. Rajasthan High Court in the case of Niharika on 12/7/2019, they also said it cannot have retrospective effect. It only has prospective effect. However, the division bench of Rajasthan High Court only, they stayed the operation of this particular case. Then comes Bombay High Court, our own Maharashtra, Bombay High Court. In the case of Joseph Isharat and Rosie Gaikwad, friends, this was not typically a PBPT case. This was a very beautiful case where Joseph married a lady and the lady already had a daughter by the name of Rosie. So she was not the biological daughter of Joseph, and Joseph bought some property in the name of Rosie, and Rosie later on claimed this is my property, and everybody decided in favor of Rosie, and Joseph said it was my money, I put the money in the name of Rosie, and so I should get the benefit of this PBPT Act 2016. It may be a Benami transaction, but there is an exclusion. So it is a real owner. I am the real owner, so I should get the property. But let's not get into the nitty-gritties of the case. But here again, Bombay High Court said that the whole edifice of the defendant's argument is based on retrospective applicability of the amended Benami Act, and this edifice must fail. Means in short, retrospective application not accepted. And this SLP was dismissed. This SLP was dismissed by the Supreme Court on 28/4/2017. Interestingly. Now, okay, so these are just certain issues which have been mentioned in this case. It's interesting study. Now, this is a against judgment. Chhattisgarh High Court, Tulsiram versus IO, initiating officer, writ petition 15/11, whether the provisions of the 1988 Act being made applicable upon the petitioners when it is undisputed that the petitioners acquired the property before 2016. Now, this particular High Court said that the in a way, retrospective application is correct. Is correct. They have given a justification by that in the answer part over there. Let's not get into that, friends. Excuse me for that. So Chhattisgarh was only effectively in favor. So the definition of Benami, as we have always seen, is, transaction or arrangement transferred held by transaction of a transfer has a termination when the property gets transferred to the transferee. Okay, so transaction means there is a transaction start and there is an end to the transaction. But an arrangement of holding the property may be a continuous act. Transaction is the starting and ending point, but an arrangement may be a continuous act. So in view of this extended meaning of Benami transaction, that 290 includes arrangement. The provision of subsection 3 and 53 will be attracted to all such transactions where the property is held for the benefit of those who have provided the consideration, even if those transactions took place prior to 1/11/2016. A lot of logic was given from this particular case of Tulsi Ram. Friends, what I want to say is that you have prospective application, retrospective application, but in RERA, I'm changing the topic, forgive me, there is something known as retroactive application. Means on 1/11/2016 the law comes, the PBPT. Now what about those properties which on this day are held Benami, acquired prior to 1/11/2016, but on this day, now from this day the law is come into force, and you say it is prospective. If it is retrospective, then the story is over. But if it is prospective, then what about those transactions which on this day are, let's say, Benami? One school of thought says that, so that's a violation of the 1988 Act. So the answer to that is fine. If there's a violation of 1988, can you take action under the 1988 Act? Were there rules under the 1988 Act? For 28 years, there were no rules. So you can't take any action. So it becomes infractious. But an amendment act has come now. But you want to apply the amendment with retrospective application, Article 20. So it's a pro and con. It's like for and against, and that's why we find few high courts agreeing to prospective, and the Tulsi Ram Chhattisgarh not accepting that also. This is an interesting judgment from the PBPT tribunal, which is the PMLA tribunal in New Delhi. This was a case where there was a person who bought a property. He paid money to the builder, and let me just see. Well. Yeah, sorry, I just skipped a few slides just to be sure that this is the same case. So this Ramnik Singh booked a flat from a builder. He paid him 9-10 lakhs of rupees in 2006 or whatever. Then Ramnik Singh did not have the money to pay to the builder. The builder kept on demanding, come on, the work is progressing, please pay me the money. Ramnik Singh, I don't have the money. So Ramnik Singh found a buyer, Pmla. Pmla paid the balance amount to the builder. She told the builder, please transfer that flat to my name, under construction flat. The builder said, no, until you make the entire payment, it will be in the name of Ramnik only. You keep paying me the money. So Pmla kept paying the money. But the allotment letter, everything was in the name of Ramnik. And later on, it was transferred to the name of Pmla. Simple transaction, friends. AO says the property is in someone else's name, consider Ramnik's name, consideration provided by Pmla, meant for her benefit in future, ingredients of 290 are complete. This is a Benami transaction. The matter traveled. Ramnik won in that particular case, citing a lot of case laws also, citing interesting issues. This matter was argued by Taneja sir at the tribunal, ex-ITAT member. They relied upon the Lilavati judgment, which I think so we did take in a few slides back. One interesting point in the Benami law is, just read that third or fourth sentence. The initial burden of showing that a property is Benami rests on the IO. It is on the IO, a heavy burden is on him. And this burden can be discharged by leading direct or strong circumstantial evidence. Just on the basis of suspicion, you can't just trigger off these kind of punitive laws. There should be strong, incontrovertible evidence. This responsibility is going on the shoulder of the IO. In income tax, on doubts and suspicions, assumptions and presumptions, assessments are made. But that is a revenue law. This is a punitive law. I'm going to be sent to a jail for minimum 1 year on suspicions, doubts, conjectures, and surmises. You can't penalize me. You can't confiscate my property. So these things have really helped in this particular case. Burden is on the IO. So on the authorities, there's a heavy burden of proving this case. The same thing about Lilavati and the Valiamal case. There is a presumption in law that the person who purchases the property is the owner of the same. This presumption can be dispelled by successfully pleading and proving that the documents taken by Benami in the name of another person. You need to prove. What is important is the documents which have been made. Friends, I would not read this, but this is academic reading which I've extracted from this case, which is interesting. Let me say, okay. Once again, para 41 of the judgment. Oh, please read para 50 of the judgment. These are interesting points which I've taken out for you all. It is well settled proposition of law that a statement which is based upon and matching with the contents of documentary evidence has got more evidentiary value as compared to a statement out of thin air. Means, I give a statement before the IO. Sir, I'm a name lender, I'm this, I'm that, I get commission, and this is all fake, and I got the cash and I give a check. Okay. And there is a document, and I make a retraction later on, and I submit a revised statement. It's arguable. I'm not saying no, friends. Now, it is a well settled proposition of law that a statement, the next statement, which is based and which is also matching with the contents of documentary evidence, has got more evidentiary value in the eyes of law as compared to a statement given in thin air on the basis of memory, and that too after a long time gap from the date of the event. I'm not saying this becomes a gospel truth, but I'm saying this has forceful effects and impact on any case. Then, when Pamela was told that Ramnik has made such a statement, Ramnik gave a wrong statement to the authorities. So Pamela said, I want cross-examination, the way we all ask cross-examination. Now, friends, in cross-examination, a word of caution. This is on something which even I'm fighting before the tribunal. Please read that last para. Pamela requested for cross-examination and a fresh statement of Ramnik. It was to be recorded in her, as it was, she said that you recorded the statement in my absence, please record in my presence. She requested that cross-examination should be allowed to be done by her lawyer, by her representative, can be a CA also, in her presence. Friends, whenever you're asking for cross-examination, the cross-examination can be done by a law person, rules of natural justice, but preferably in the presence of the assessee. Please try to ensure that. That's what I'm saying. It has come down from this particular judgment. And then this particular rule of the Tulsiram judgment. These are all different judgments which have been used in the Ramnik case to fortify Ramnik's judgment. Sometimes there is a written document and you make an oral statement. The same point. The general rule is that there is exclusion of oral evidence. Oral evidence takes a back seat. So that takes a back seat as compared to documentary evidence. The terms of a document should not be allowed to be varied, contradicted, added or subtracted upon by oral evidence. But then there are always some exceptions to that as far as oral evidences are concerned. So what is written holds a lot of value. They in turn relied upon the Mangathai and the Joseph Isharat judgment of Bombay High Court, etc. Here also they made an observation. In this case, that's an observation. Not sorry, friends. Now this is the Rajasthan High Court judgment of Kalyan Buildmart as late as 6th October 2021. Same issue of retrospective applicability. Over here it was observed that, now the High Court is observing this and I've copied it from that. Suffice it is to notice that in some of the judgments, Mangathai and Joseph Isharat, which is Bombay, the Supreme Court, Joseph Isharat did travel to Supreme Court. The Supreme Court has observed that Benami transactions not too applicable retrospectively. I hold reservations on this statement of the Honorable High Court also, because the Joseph Isharat judgment of the Bombay High Court, SLP was dismissed, what I just said. But SLP dismissed does not mean it has become the law of the land. Anyway, this was the observation by the High Court. In this particular case of Kalyan Buildmart, a company, presumably, got a lot of bogus share capital and purchased land. And then internal shares of the company were changed and went to somebody else. IO said this somebody else was the actual real owner and this company was just a Benamidar to buy that property, and hence the entire case was developed. Now friend, look at this point number 42. Fantastic point by Rajasthan High Court. This court also finds that the proceedings initiated after 10 years of the purchase of that land by this company was made in 2007. They're highly belated. What, after 10 years you're coming up with a Benami concept? Ordinarily, any proceedings related to Benami transactions, friends, I'm repeating, concentrate on this line. Ordinarily, any proceedings relating to Benami transaction ought to be taken up immediately or at least within a reasonable period of 3 years as provided under the law of limitation. This is not the law of the land, but it's an observation by High Court. Persuasive value. This entire proceeding of Kalyan Build Mart was found to be based on income tax proceedings. There was a shareholder, Madan Mohan Gupta. He was called by the ITO. Madan Mohan Gupta said, "Sir, I am a shareholder of Kalyan Build Mart and I am the director, but I am only namesake. Actually, all the money is given by somebody else. I was just made a director and I was told to buy the land. And once I'm the shareholder and the director, I give up my shareholding and transfer it to that person who provided the money." That's why he gave this statement, but still the company bought the land. Company is not an fictitious entity. It is there on the ROC records. And the land was meant for the company. And this company in turn sold it to the Jaipur Development Authority, JDA. So the tribunal felt that the ingredients of 29A are not fulfilled and they came out, High Court, High Court. And the entire notice under 24(1) was quashed. Now, friends, there are some standard operating procedures issued by the investigation department of CBD for PBPT proceedings. Now, this is slightly strange. Supposing the Benamidar stays in Delhi, the real owner stays in Chennai, and the property is in Kolkata. Which BPO will initiate 24(1) proceedings or notice? Delhi, Benamidar, Chennai, real owner, or Kolkata? Now look at the answer which is given in the SOP. In case where I'm at the center, in case where the Benami property beneficial owner and Benamidar in different territorial jurisdictions, the BPO from which the first show cause notice under 24 is issued shall assume jurisdiction. So this is playing like fastest finger first. Delhi wala ne pehla notice diya, the proceedings go to Delhi and everybody has to appear before Delhi. I don't want to comment beyond that on this. This was the reply on charitable trust applicability to the Baenami Act, and this was the reply of the finance minister. He's gone on record of making such a statement. If you make an illegal business out of it, you are suggesting us now that the property is your Benami property. You create a fake religious sect and start keeping Benami properties, and the government will not exempt it. Otherwise, they can exempt it. Anyway, now those who are providing information of Benami, they also get rewards. There is this particular scheme. I'm just putting it over here. I don't want to discuss much about this. Anyway, friends, sorry I short the time by a little bit. In this 2.5 hours or 2 hours 45 minutes, I just try to cover up the entire subject, critical issues, some judgments, and I leave it for if there are some questions based on the limited understanding I have on the subject.
Thank you. Yeah. Thank you so much, sir. We have some questions. You just 1 minute. So I'll just share my screen. So is my screen visible, sir?
Sorry.
Is my screen visible?
Yeah.
Yeah, 4 to 5 questions.
So now for deposit in post office, a girl's children marriage scheme deposit in the minor's wife can be resorted to for coming out of IT or Benami law. Though the question is not very clear, as far as I can understand, is there are some deposits in the post office, or for a girl's marriage, you have child, for a minor child, you have made some deposit in the minor or the wife's name. out of the funds belonging, let's say, to the father. I wouldn't say primarily on the basis of this it becomes Benami property, because as I was saying, under the exclusion for spouse and for children, if any money is kept or property is bought, then that would not come under the impact of 29A, and it would be out from the exclusion clause. What is the limitation period for initiating action under Benami? What is the idea behind such a... Friends, we have not finding anything specific on the limitation. You see, the judgment of Rajasthan High Court only made a cursory remark on the limitation aspect of 3 years under that particular judgment. So I rely upon that particular para of that particular judgment. What is the idea behind exempting? I wouldn't say they are exempt. They may exempt certain religious or charitable properties from the application of section 58 so as to keep these trusts out of the rigors, because I do not know how do I answer this. Typically, the religious and the charitable trusts are a very sensitive topic all over the country, and so if the impact of PBPT is coming on them, huge amounts of properties stand attached. Friends, what is normally happening is the IO is attaching. AA is typically, my experience, confirming the attachment. The matter is going to the tribunal. The tribunal is not having any member chairperson. The last chairperson was Honorable Shri Manmohan Singh Sahab. That was in September 19. Thereafter, after September 19, there has been no chairman of the tribunal. In fact, even in the Pmla tribunal, which is the same PBPT tribunal, and after what, March or April 20, there is no member in the tribunal. Literally, as on date also, there is no member in the tribunal, and the cases are building up. So attachments are just continuing like this. They do want to hit the charitable trust and the religious trust a lot with the rigors of. That's why they were wanting to exempt it. By notification, they will exempt. The word property under 29AB, it covers movable and not an expenditure. Suppose the X pays money to Y to spend for the grand marriage of daughter of X. No asset created. Does this? No. The Benami transaction is typically concerned with property. So there has to be a property, and you have to fall within the definition of property. That's important. Section 281 would invoke apply in the case of transfer of property by Benamidar. I think so. You're talking of the erstwhile section 281, which is perhaps off the records of the income tax department, unless you're talking of if I, friends, I have the act over here, certain transfers to be void. I think so. This is what you're trying to refer, that there'll be certain transfers which will be treated as void on account of certain things. Would it invoke to transfer a property? Friends, I would say always section 281 may not be on account of Benami reasons. Typically, a person has got a lot of demand and he tries to sell away his property, and so that he's out of the demand. Dirty things which have been happening. Benami would be restricted to your violations of 29A, B, C, D. So I wouldn't really say that 291 has to invoke PBPT. Will the UK or A take possession of the property? Sorry, I didn't understand UK. A will take possession of the property, yes. If the tribunal decides you and confirms the attachment, then the adjudicating authority under 27(1) and 27(2) can pass confiscation orders and take physical possession of the property. 29A, fourth exception, brother, sister, lineal ascendant in property held jointly with relative. 56(2)(10). Other than above, would PBPT applies? Yes, PBPT is not concerned with your definition of relative under 56(2)(10). It is only concerned with brother, sister, lineal ascendant, descendant. That's all. Brother's wife, sister's wife. No, they are not coming into that. So only the definition which was over there, cousin, brother, father, nothing is coming into all of this. So PBPT would apply only to this and not to your relatives under 56(2). Sorry, it would apply to all other relatives. These relatives, namely brother, sister, lineal ascendant, descendant, may be out of the purview, provided it is a joint agreement consisting of the real owner's name and the brother, sister, lineal ascendant, descendant's name. How the transaction will be in doubt when the consideration paid through banking channel having sufficient financial sources? I agree with you. It should not be in doubt. And just because somebody is paying some money and it is in doubt, that doesn't mean it becomes Benami or through banking channel. Friends, Benami, remember 29A, property transferred to somebody, consideration provided by somebody else for the benefit of that somebody else. If these ingredients are there, leaving the 4 exclusions and the 53A TOPA, Transfer of Property Act, then it is coming under Benami, not otherwise, or BCD, which we just discussed, 29B, C and D. So just because it is through a banking channel having sufficient, I wouldn't say there is Benami, even I wouldn't say so. The other ingredients have to be established. What is the main issue? Whether management or intention or consideration payment, I would say intention plays a very critical issue over here. Whether management, I'm not able to understand. Do you mean the structuring of the deal? So intention is important, and of course structuring of the deal is also important, if that is what you meant. When under IT Act in certain cases section 149 can be given up to 10 years, how can a very short period of 3 years be deemed reasonable? Friends, now that is just the observation of the Rajasthan High Court, and I thought it to be a very interesting observation. That is what I brought it over here. But if you ask me, under the PBPT Act, is there a time limit that a notice under 24(1) has to be issued within 3 years, 5 years, 6 years? Answer is no. The answer is no, friends. Just for your academic information, friends, just for academic information, under RERA also, there has been some judgments, and I'm not getting the citation right now, which has stated that if the date of possession is not mentioned, does not mean an indefinite period of possession can be given to the builder, and a reasonable interpretation can be given to that, which can mean, to the best of my memory, 3 to 5 years. So in PBPT like 148, there is no 3 or 10 years. I agree. But Kalyan Mart, the Rajasthan High Court did give this particular observation. Otherwise, friends, imagine a PBPT violation of 2022 and a 24(1) notice coming in the year 2040. I'm just taking an example. How long do you expect an SSC to maintain these records, etc., etc.? 2040, the IO at that time will tell you, you got the consideration from whom? It's a fictitious person. Can you prove it? Oh God, it's going to be so difficult. So maybe some reasonableness has to be there. As per the Child Labor Act, anyone who's below 14 years is a child, which is the correct age to be taken. Oh no, friends, a child under PBBT does not mean the biological chota bacha child below 18 years. Even a 60-year-old person can be the child, because you have to see from the point of view of the real owner also. It only does not only mean a 14-year-old child. Definition of beneficial owner says whether his identity is known or not. When a person's identity is not known, how can such an imaginary person be adjudged as beneficial owner? I'm so sorry, I'm not able to. Have you tried to let me see? Beneficial, okay, you're reading from the section. Beneficial owner means a person, whether his identity is known or not, for whose benefit the Benami property is held Benamidar. Whose identity is known or not known, the property is held as Benamidar. Now, how can such an imaginary person be adjusted as Benamidar? Friends, what I think so, what the gentleman is trying to ask me, the person is trying to ask me, is that for a Benamidar beneficial owner, his identity may be known or not known. So if the identity is not known, how can such a person be a beneficial owner? There can be scenarios or situations where a person's identity may not be known. Now, a person does not mean a living human being over here. It can be perhaps a partnership firm, or it can be an AOP, which may be unregistered kind of an AOP also. And friends, just to give you food for thought, just food for thought, I form a company in the name of A Private Limited. Then I change the name to B Private Limited. Then I change the name to C Private Limited. Then I do a merger and acquisition or something like that. So now the name A Private Limited is available. Can a company be made in the name of A Private Limited? It's a question I'm raising, because that original A Private Limited name has changed to B and C Private Limited. So A is now available in the market on ROC for name availability. Let's say an A Private Limited company has been formed in that particular name. Original property bought in the name of A Private Limited. Now the name has changed to C. Somebody forms another A Private Limited claiming this property is his. I'm not opening up a topic for discussion, friends. I'm just trying to say that the identity is not known. At times it can be confusing in the complex maze. That may not mean that it is an imaginary person, because it is digging down a complex trail. You're trying to establish whether it is a fictitious person. That means a complex trail to be established. Please share the case laws regarding the female lineal ascendancy descendancy. That's a good question. Maybe my memory is not accompanying me, but well, Oh yeah, yeah. Friends, whosoever is the person, it is Rajasthan High Court CIT versus Dhanalal Devilal, 1956, 29 ITR 165. The female lineal ascendancy descendancy, it's a passing remark. 1956, 29 ITR 165. Dhanalal Devilal case.
We took up all the questions, sir. Thank you. Thank you so much for your excellent session, sir. And,
Okay.
on behalf of SIRC chairman and office bearers in their absence, we thank you so much for the time spent here for a knowledge sharing session. Thank you so much. Look forward to much more. Thank you. Thank you so much.
Thank you.
We'll wind up the session.